one. Hey everyone, Douglas here, and welcome back to the MMT Macro Trader live stream. For the most exciting, I don't know, maybe 2 to 3 hours live stream, MMT live stream on the planet. Definitely the number one MMT live stream on the planet. Welcome back, everybody. I've got Bijou.
I thought we were the only one on the planet.
Oh, yeah.
I mean, Applied MMT podcast is like our little appendage that we allow to exist.
Yes. But they are the best podcast on the internet.
Oh,
we are a live
Sure.
stream. I like to distinguish. We do it live. Whatever comes out of my mouth stays on the internet, for better or worse.
That's right.
For
no editing here, man.
For the remainder of eternity. Anyway, howdy everyone. Thank you all for joining tonight. If you're in the chat, make sure you say hi, drop us a line, all that good stuff. We'll take your questions tonight. Obviously, we love engaging with the chat. That is always a priority. We have a lot of fun stuff to talk about tonight. We got some Twitter drama. I've posted a few threads that I want to go over this week, kind of maybe explain in more detail. We got Bob Murphy making I think I even put, did I put that in the chat? No, I put Jay Powell making an ass out of himself today. Bob Murphy, not really making an ass out of himself, but just doesn't understand macro and MMT. He's
serious for a central banker.
Yeah.
What are they doing? Micro agent stuff, are they? Jeez.
What else do we got?
We also featured Ty Keynes in the Twitter drama.
Yeah, he did. Oh, yeah. Ty got a shout
Bob
out.
Murphy.
Ty got a shout out from Bob Murphy. Yeah, we have a lot to cover. I know Bijou has some stuff that we never got to last week. Speaking of last week, that's actually where I want to start off as people kind of trickle in real quick. I know probably everyone that's watching live right now saw it last week, but if you didn't, make sure you head on over to the YouTube channel, go to live. We had a 3-hour discussion with Ryan from the Applied MMT podcast. And it was an amazing discussion. I mean, it was really a great discussion. We got to have Ryan back on. I have some more follow-up questions. I need to re-listen to that again. There was so much, there's so much going on during that entire live stream. Just in terms of,
although I think Ken PDX and someone else, there was someone else on Twitter just made some comments, like one-liner comments, and I thought they summarized our entire 3 hours in one sentence.
What was that?
It was pretty funny. Oh, just summarizing it by
okay, I'll have to check it out.
When they spend, when Treasury spends, it supplies the funds to buy the
necessary
bonds.
fund.
Basically, case closed. That was it.
Yes.
It was like funny, so funny. But yeah, it was really good discussion with Ryan because it's into some of the nitty gritty and some of the operations stuff surrounding banking and markets.
Yep.
And of course, all the market stuff is. Yeah, I'm pretty hopeless with all that. I just follow the lead of you guys.
We'll get you there, man. We'll get you there.
I know. It's a journey.
Speaking of which, we're up since the TGA thing was supposed to be apocalyptic, right? There was a Lynn Alden. She's huge. Got a huge following on Twitter, like over 600,000 followers. She was doing the whole, it's liquidity. We're going to have this big liquidity issue when the TGA starts to get refilled, all that sort of stuff. And she's like halfway to MMT, right? Like everything's not quite clicking. I think she gets some of the concepts certainly click. And she's even said a few things where I think she understands why interest rates are inflationary, but not exactly connecting all the dots. Anyway, she was calling for liquidity Armageddon, and since then we're up like 5-6%. I mean, we just one of the fastest moves higher we've seen in quite a long time. So Ryan just absolutely nailed it last week in that discussion.
Yeah, he did.
And it was a great discussion to have with him. So
yeah.
Are
they still thinking sort of basic kind of primitive?
Yeah.
Primitive models in their own head, like loanable funds and stuff.
I think
like
so, yeah, because she put up this afterwards. She put up this whole thread about like reserves are just as much as money as deposits, and it's kind of like not really.
Yeah, there's score points, but they clear banking payments. So if you want the banking system to clear without some software hiccups, it's a good thing to have some reserves around.
Yes,
but otherwise,
yes. So anyway,
and it's a good thing to have reserves around because the freaking Fed or Treasury, actually, who is it? But they're paying interest on reserves. I guess.
Yeah. The Treasury is technically the Fed. I'm sorry, the Fed is paying the interest. Yeah.
It is, but it comes out of the government. It's the pocket, left pocket of government. So
anyway, really good discussion live stream last week with the guys over at, well, just not the guy, Ryan over at the Applied MMT podcast. Check that out if you haven't.
Although
already.
I noticed it was maybe a bit late for Ryan. It was a bit late for Ryan, wasn't it? He didn't have his chuckling laughter.
It gets
really good to listen.
I think he said he's got
very serious with us.
I think he said he's got a young child too. So, but yeah. Speaking of which, Applied MMT podcast. By the way, Charles, welcome. Ken, welcome. Josh, welcome. If you're in the chat, say hi, and I'll definitely shout you out.
Yes.
Make sure you hit that like button, all that good stuff. Applied MMT podcast again. It was awesome to have them on. Speaking of which, they had a great interview with Nick Gomez, ANG Traders. There is a certain now Floridian that claims he's the only one, although he changed his tune. He actually said in an update the other day, "I'm the only one that I'm aware of." Very interesting. Yeah.
Little concession there.
But anyway, unbeknownst to me, I've seen ANG Traders on Twitter, but I didn't realize how MMT aligned Nick Gomez was. It was a great interview. If you're an active trader, active investor, Nick Gomez did just a great job of laying out. I was almost like, Nick, come on, man, dude. Listen, I make people pay for some of the stuff that you're giving out right now, man. He was doing. I'm joking. I want all that out there. But he was really he was spitting the alpha, and anyway, Josh, exactly. I need to highlight that. I have to legally fight him. Ooh, he's in good shape, man. I don't know. I mean, I used to do a little boxing. I used to be, but he's doing like the 10-mile run every morning. I don't know. I don't know the Norminator could floor me, so I could run around him pretty fast. He'll never catch me, but if he does tag me, I'm toast. So yeah, I'll send to Douglas as my. What do they do on those sort of medieval things like challenge you to a duel, jousting?
like on what was that TV show that was popular recently with all the dragons?
I'm a pop culture is not
Game
my
of
thing.
Thrones.
Oh,
Game of
okay,
Thrones,
Sorry.
So when you get challenged, not that I'm big enough, I'm just the small fries here in the back office or in your basement. But if I ever get challenged, just letting you know, if I ever get challenged by the Norminator or anyone, it's Game of Thrones time for me. I'm the dwarf. I send in you as my champion. You see, that's how it works. You always get to choose a champion.
Okay. I'm going in.
Yeah.
I'm going in. You know, it's
you
funny.
can send in someone else. You can send in Jesse Ventura or someone.
Yeah, you guys can't see that the guns are being cut off by the by the window here. I started out tonight. I couldn't find the T-shirt I was going to wear, and I literally had on my tank top that I was like my beach tank top that I had around today. So I should have kept that on. Anyway, Applied MMT podcast, great interview with Nick Gomez, 2 parts. He gets into a lot of good detail on some of the data to take a look at that really correlates and explains markets. So Nick, if you watch this later on, I know you've jumped in the chat before. Great job, really cool stuff. Glad to see there's a growing number of us out there, and I thought you did a great job of kind of explaining what was out there. Again, let's see. What are we going to talk about tonight? Like I said, I want to go over that Bob Murphy tweet. That was great.
Okay.
Some of the other things that we'll go over. I finally published something on GitHub. You probably haven't even seen it yet. But I published something on GitHub, so I want to share that as well. I really want to go over the interest rate thing. Obviously, the breaking news right out of the gate is that the Fed, Jay Powell paused. He hit the pause button. And Bob Murphy, the Austrian. Yeah, correct, Charles. Anyway, he hit the pause button today on interest rates, and markets went wild. We dropped like 1% and then rallied right back after that. Not too much change in markets, but he hit the pause and said more interest rate hikes are going to need to come. Bijou, The other absolutely breaking news here, we'll get back to the rate thing too, but the other thing I want to lead off with, New Zealand enters technical recession after economy shrank to 0.1% in the first quarter. Are you feeling the recession in New Zealand right now?
Yeah, well, I think people with debt, student debts and things are in a bit of a tight situation. But we don't sort of notice it too much. Like there's no. And I guess it's been a slow story, slow sort of rundown, I guess. But it's
anyway,
technical recession. I guess I'll have to look into what they mean by technical.
I think they mean based on growth, but probably there's
growth. Yeah, I tend to look at unemployment more than
which is far more important.
Growth.
Yeah, they don't even mention unemployment. Speaking of mentioning unemployment, going back to the rate hike thing, and a few people have tweeted this out. This is what Jay Powell said in the interview portion or the question and answer portion following the rate hike decision to go ahead and pause rates. He said, the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience. It's just remarkable. What? If you have children, listen. What an ass, man. Jeez, oh, Pete's. Yeah. Jeez, oh, Pete's. My understanding is Warren Mosler was willing to fly out, have the discussion with Powell. They said no. So frustrating. Yeah. So frustrating. But
what do you expect when you put people on the lower income rung of the ladders and who are in debt? You put them under pressure with higher rates, and when you've already got a supply shock with higher prices, and then you supply the money to the rich folks to sort of sustain it all. What are people going to do?
Yeah.
Say, oh no, thanks, I'm good. I'll stay home.
Yeah. That's actually a really good point. That it's not like, it's not like people aren't going to want to look for work and look for higher wages, especially in a scenario where you kind of have the additional income that's coming in going to. Going to the
absolutely
wealthy.
Right.
Yeah.
You to knock out a job market if the government isn't hiring, you've got to really squeeze firms.
Yeah.
So you've got to really do something extraordinary if you're on a floating exchange rate and you've got automatic stabilizers pretty well built in from basically decades and decades of policy that have sort of been slowly edging towards MMT without realizing it's MMT. You're going to have to do something pretty extraordinary to just use rates.
Yeah.
Monetarist policy to crush any firms that want to produce output and so therefore need to hire people. And so their whole thinking is very, it's just incredibly sort of simplistic. But I guess they throw a lot of parameters at their DSGE models, so it looks complicated. And it's all Ptolemaic epicycles, and it comes out and says, oh, well, this should produce a bit more unemployment. Oh, whoops, it didn't. Okay, well, let's hike rates a bit further. So it's all backwards.
Charles,
the story backwards.
Charles, I know you're just dogging us a little bit, but right now I don't think I'm issuing I don't think I'm issuing any policy prescriptions at this point. What I would say is unemployment isn't necessary to bring down inflation. Maybe I did say something policy-wise, and you can correct me. But at this point, I think I'm just...
because employment brings down inflation because you're producing output.
Exactly.
Yeah. So the wage pressure, there was actually Bill Mitchell talks about it. There was a study from the Federal Reserve Board of San Francisco, and oh man, they're just sort of hard-nosed researchers, right? They don't seem like ideologues there, at least the people who did this research. And that research paper was just obliterating the mainstream story and it was just basically econometrics. So it wasn't really any kind of ideological framework. They were just doing a bit of statistical analysis and just showing that, the wages aren't causing any of the inflation.
Interesting.
And the increase in your employment cost index, ECI, is pushing up prices because they pass it on to their consumers, the firms. But that's like a tiny fraction of a percent.
Of
core inflation.
Yeah.
So it's like, you can cherry pick and tell a story about this and whatever labor market tightening and all that causing a bit of price pressure, but it's really not. And they go through the whole story, and it's a pretty good read for anyone who's interested in econometrics and getting a story that's very close to what Bill Mitchell was sort of clapping them pretty loudly, saying they actually seemed to be pretty honest and upfront and telling the story pretty straight. So that was interesting. Yeah. They've got all black. It's all backwards. Interest rate backwards. Labor market backwards. Effective wages backwards. Whole thing's backwards. They say in Australia, Norm, you've got the interest rate backwards, me mate. Or if you translate it into South African, hi Yanni, you've got the interest rate backwards, bro. Or as the Scottish would say, oh, Jimmy, you've got the interest rate backwards, lad.
Now the question is
the Irish often put it technically correct. Our Paddy, you've got the interest rate backwards, you cunt. So it's universal.
Yeah, they've got it backwards, as we say here in Michigan.
Canadians can't say it because their mouth's too full with pancakes and maple syrup. By the way, I was thinking of making pancakes the other day, but there was only the corn syrup, and you just cannot have pancakes with corn syrup. It's just like a violation of the laws of nature.
Okay.
And it doesn't matter how low my bank account is. I'm gonna buy some Canadian maple syrup to have on pancakes, or I just won't have the pancakes. Yeah, I don't know how to say it in Canadianese. Sorry, Josh. Anyway, back to the serious stuff.
No, it's fine. Now I'm thinking of how I'd say something in Canadian.
Dr. Man Douglas.
Yeah, people have asked me if I'm Canadian
Dr.
before, because apparently I sound Canadian. That was one of the first comments I ever got on YouTube is something about being Canadian. This is very offensive.
Something in the air. You're up close to that border, right?
Yeah. So yeah.
Linguistics.
It's very, very close. Very closely shared linguistics. Yeah. What was I going to say?
All right. Did you do your table of contents for tonight? Is that all done?
We did that. We're right now. I'm sharing. You can see what I see. By the way, Shot, welcome. Monique, welcome. Everybody. Thanks for showing up, guys. And thanks for always dropping a line in the chat as well. I do got CPI up. I just kind of want to go over a couple thoughts here. What's really curious to me, I don't have it pulled up. Core CPI is still kind of flat, and I know that's one of the key things that the Fed looks at, along with employment and other growth metrics. I'm curious to see what the Fed really is going to end up doing here, guys. This is really the big question for me. And actually, maybe I'll put this out on Twitter if anyone wants to help me kind of gather some data. But listen, the Fed looks at three things. They look at the growth, they look at inflation, and they look at, what was the third thing? Oh, employment. So they really weigh three things. And if you overlay employment, growth, however you want to measure it, and inflation with interest rates, it's a really strong correlation, right? Obviously, not all three always are matching, but usually 2 out of the 3 are. We're in a very unique situation because of the Fed having it all backwards. But the Fed is going to determine what it does based on those factors. With that being said, I mean, if anyone can think of any other data in that kind of, in that realm, what I'd be really interested to do is one of two things. Maybe one, build like a Minsky model to see how long this thing can go for. Then the other thing too is I want to build like a deep learning model to guess, one, what is the Fed going to do given the data, right? What are the probabilities and what would what's the path forward going to look like? And then two, maybe what is going to come of CPI as well, or some of the other things that would be directly related or be an outcome of where interest is going, or where the rates are going. Because I just see this continuing to spiral up. I mean, I think that is how this happens. The Fed seems interested at this point in continuing to push continuing to push up rates, which is only going to continue the spiral higher that we've seen so far this year. Yeah. I mean, we're almost we're more than a year into the interest rate thing. The other thing, Bijou, I'll let you jump in here. The other thing too that I'm expecting is so far, like for CPI, we really haven't been seeing consecutive weeks. I mean, in fact, this is the first week where CPI was greater than expected. Inflation rate itself was lower than expected. But I'm starting to think that we might be getting into a bit of a cycle here, kind of like with the employment picture, where we get higher and higher actual outcomes with CPI, because I'm really starting to think that the drop in inflation from like kind of the end of the transitory inflation is going to go, and now we're going to see that second wave of inflation coming from the additional income interest and all that sort of thing starting to play out. So I'll be interested to see how that plays out. There's been quite a few people who've overlaid the inflation event that occurred in the 1970s with what's occurring right now, and in terms of timing, it's kind of wild how much they overlap. So it'll be curious to see if we get something very similar and how long that will last. So that'll be I guess what's kind of on my radar.
Do you have to go into the 80s too though, because when did Volcker bring down the rates? Wasn't it
80? 81. Yeah, correct.
Oh, is it?
Yeah. Actually, I'll lead off with this. This is where we'll start. We can find out. Bijou, again, you probably don't know this, but there was a chat last night. Someone wanted to visualize the yield curve over time with inflation, and I'm like, what would be kind of cool is you saw. So I did. I finally.
Derek.
Yeah, Derek. Yeah. Really cool guy. Does a lot of good stuff. Puts a lot of good stuff out there. And I thought, I'll do this one for the community. And so I made
He's an interest rate man. Yeah,
he really is. Yeah. Sorry, I'm cutting you off.
That was cool.
No.
Go ahead.
What was it? Yeah.
Derek's great. He does it. He's the interest rate man. You're the data man. Ty's the modeling man.
The modeling, the systems dynamic modeling man. I mean, he's good looking, but not quite the model man.
It depends on what underwear you're into.
Oh my God! No! Before I jump into this, what I got where I need to start. Oh my God! Before that. This weekend, this Saturday, do you know who's going live on the Steve and Friends live stream podcast? Is this guy right here? It's not up here yet, but I will be. I'm actually replacing Steve Keen. Steve's going to be gone, and they're like, we need a name as big as, if not bigger than Steve Keen, and they went.
Well, who would you go to?
Yeah.
Warren's babysitting his grandson. Then
yeah. So they
got to go to the Norminator, right? In Florida.
All right, guys, that's it for tonight.
It's been canceled.
Anyway, I'm going to be on the Steve Keen, Steve and Friends podcast live stream this weekend, so make sure and check that out. I think it's Saturday noon Eastern time, so I will be there.
Okay.
We have 2 hours too. And hopefully, Ty sees this and sees Ty. If you end up catching this, I'm going to be going over my interest rate model, how it pushes growth and all that sort of stuff. So I'd love to engage with you on Saturday, and I really sincerely I would like some I don't say criticism, but this is a way you might not be thinking about it. So it'd be fun to.
What time Saturday is that?
I think it's noon Eastern. I think it's noon.
3 a.m.
For you. Yeah. No worries if you don't catch it. They keep them up. But all right, what do I actually want to say? I finally published something on GitHub. The very first thing was a 3D yield curve, and the question we were going to answer is, when did rates come down? And I'll show you the plot. There's two of them here. There's there's the stretched and then the regular. If you just download the HTML file, it's interactive and whatnot. But here's the stretched version, and if we just highlight right over here, we can see that rates started coming down in 1982-83. So that's when rates started coming down. So have at it if this is something you want to take a look at. It's all yours. And Bijou, you gotta teach me too. You gotta help me understand how to do like the GNU license or what license I want to choose to put on this. But the code is up there too if you guys want to see how this gets pieced together. True story, this took about 15 minutes. with GitHub, or with GitHub Copilot and ChatGPT. But anyway, I thought it was kind of fancy. I think.
You clean your data, get your data sorted, then the little software libraries can do a good job. Nice. Okay, yeah, it's interesting on that those blips in the yield direction.
That is what I think. That is what I think Derek was looking at, and I think he's absolutely right. Like, you can really see. Well, I think what he was looking for is, have we ever been this kind of extremely inverted, right? And the last time we were as inverted as we are now, and by inverted, like a normal curve. Let's bring us to kind of a normal time. Well, look at this, right? A normal curve would look like this, where the short end, which is where we're at closest to the screen right now, a normal curve would be the zero rate is relatively low, or the Fed's fund is low, and it goes up into time, right? So an inverted curve, and we can spin this back around, right? The inverted curve is what we saw back in the 70s at the peak, and you see it oftentimes leading into a recession, right? And his point was, and I'll just go ahead and drag it all the way over here, where we're at right now. God, this is probably really jumpy. I apologize if this is jumpy on the live stream, but we are once again very inverted, and you can really see this kind of play out in this little model here, and then it's overlaid with inflation. So yeah, check that out if you want to. My GitHub is github.com/MMT macro trader. And I think all you got to do is, it shows you what I know. Click repositories. Oh, there it is. There's my repository. So anyway, that was one of the things I put up there. But yeah, what was I going to say? 1983 is when rates came down. So yeah, that's what I got. I don't know, Bijou, did you need anything else other than the date that it was coming down?
Did I need anything?
Well, you said when did rates come down? Okay.
Oh yeah. That's the thing. Is I mean, because the 70s inflation and so forth was a slightly, quite a very different dynamic. But the monetarist policy response was similar. You can't tell exactly the same story. So it's going to be interesting to see, because we're on the west, where today we are probably at that yield curve inversion peak, but you can see it's not as severe.
Mm-hmm.
And so coming down, it'd be interesting to see how closely it matches that interest rate peak in the 80s. Yeah. So I'm just saying, it's always interesting where you get a macro effect that is, a bit like an experiment. Well, not an experiment, but at least something that you can relate to some past events. And I mean, it's all good. I mean, it's just an unusual period in the economic history they're going through, and I see it as pretty important to try to get this MMT story straight about it all. And that's why. So that's just why I was interested in the exact timing, because it looks like we're at that orange peak point. Analogous to that right about now. So
yeah, we will.
That's all.
We'll find out what the Fed decides to do. Again, maybe I could build a learning model to try and guess, what the Fed's going to do. But
well, you'd have to talk to that AI sounding name dude, the Jan Nordvig or something. Because the way you do that, right, would be to social mine the data, but you'd take it direct mainly from like feeds on C-SPAN, or all the Twitter accounts that follow the Fed or Congress or whoever. And then you wouldn't even need to listen to the radio, right? You just put it in your neural network.
Yeah,
and
exactly.
Exhaust a few GPUs, and it would spit out a summary of what's going to happen policy-wise that your fiscal flows aren't going to necessarily pick up.
It makes me wonder, though.
Anyway,
it makes me wonder. Okay, so maybe this is something, I don't know if this is appropriate or not for a learning model, right? But let's just say we build this learning model, right? And it has a pretty good grasp on where things are going, right? And then we build a Minsky model that can generate data, future data for us, right? Like given parameters, right? Let's say we never get an exogenous shock that Sean, this is really interesting to me. This is why I shouldn't have. I literally have a teleprompter with chat right in front of me, and then all of a sudden I see Atlanta Fed has Tableau dashboards on there. I'm like, God, there goes my train of thought. There goes what I'm trying to say. I kind of want to check out the Atlanta Fed now. Thanks for bringing that up. I guess I've never really realized they have much data on there. But what would be interesting to me is if I were to build a deep learning model, could I build this deep learning model and then kind of run not really a Monte Carlo, I guess, but then run the expected data based on the kind of the Minsky style model, plug that back into the learning model, and see if the learning model, and then have the learning model predict like the next year out, right? 1 month for the next 12 periods forward, and then see if it ever is able to anticipate a crash, or will it always just continue to see it spiral up, right? Like I don't know if that makes sense, but I just don't get it. And again, I hopefully Ty and I can get into this on Saturday during that discussion, but I don't see how this ends without some sort of exogenous shock that is outside of the system, right? Right. I get that there's a business cycle, and he had a really good discussion about what causes the business cycle. And I'm like, the business cycle side of things, the endogenous side of things is very important, plays a huge role in determining prices. It's part of all the models, but I don't think it can be offset. I don't think a pullback in the endogenous side can offset what we continue to see coming from the government in terms of this increased interest payments, unless there's something like a major war or something like that breaks out that's a true deflationary exogenous shock. And even then, that would just create more spending. But you get what I'm saying, right? I mean, something exogenous that would happen that would be at least disinflationary to get the Fed off the rate hike cycle. I wanted. I mean, from time to time, I do wonder about the endogenous money story and how you're going to correctly model it. Because what in your model, what term in your model are you using to inject currency from loans or increase loans? To me, you've got you've got to decrease the amount of creditworthy borrowers. The bank is not going to turn you down if you have too many pimples, or you got one arm or one leg or whatever, or you got a hippie haircut. They don't care at all. If you want a loan and you've got income to support it, they're going to give you the loan. And so where's the income? Where's the income supporting or justifying a loan? So if that's still trickling down or whatever, then it's going to continue. You won't get a tightening of bank credit under just because the interest rate is high. It doesn't work like that. But if your model, and you can do a Minsky model and do it so that if the interest rate goes up, the bank loans go down. Well, then your model is wrong. It could be wrong. You got to look at what the regime you're in is, and how you got to model the number of creditworthy borrowers, per head of population or whatever scaling you're using in the model. Anyway, so it's not even an easy thing to get a Minsky model, accurate, fully calibrated for reality.
Calibrated, And that's why you want to do maybe Cindy, or you want to do some Monte Carlo to figure out what the parameters are that describe any particular country of interest, because it could vary depending on which country.
What politics they have. Yeah, that's a good point.
That's what the guy Pedro, I think his name was, did in Spain, or was it Portugal? Portugal. I want to say Portugal, but it might have been Spain. I think it was. Anyway, he
wasn't he South American? Wasn't it like Chile?
It might have been, but he did his PhD for Portugal, I think.
Was it? Okay. Well, chat's saying Portugal, so gotta be Portugal.
So and so he just did a whole lot of traditional fitting of the model to the data, and that's the way he did it.
Okay,
but you could do it anyway. You could do it. You use a neural net as well to train your parameters for your Minsky model on the actual time series, and do it that way if you wanted to. Either way you do it, you have to do it if you want to like have a qualitative picture of a particular country, you'd better do it for their particular policies. And if you don't want to like do the social media data mining to figure out policy, which is actually a bit of a pain, because then you have to translate that back into the model. You don't want to do it that way. I think, Monte Carlo or neural network is a good way to determine your parameters.
Yep.
But even then, you're not going to get the right parameters, right, if you don't have that particular term in your equations.
Which
it's a bit of an art.
I can't wait to get into it, man. We will eventually get into it, everybody. Step one, we got to finish this dashboard. We're going to get that up very soon. It's very close. Part of the thing that Bijou and I talked about last week or 2 weeks ago after we were done is we got to make we just absolutely have to make the core MMT data public, free, accessible to everybody. I want people to see in a way that kind of we see it from an investment standpoint, how it interacts with the economy. And so that is, that is really important. Once we get that live, then then we got to jump into, I think, the Cindy models will be key. Building some Minsky style models will be key. Using agent-based modeling. MESA. Yeah, I've looked that up before. It is on my to-do list to see how much ChatGPT understands of that stuff, so we can start building it up. It'll certainly be there. Which, speaking of which, this will be my one plug of of the live stream for the Patreon here, patreon.com/MMT macro trader. Listen, real quick, it has been, if you're an active investor, active trader, check us out. We have been absolutely crushing it. I've been building two tools recently using together that are new: the deep learning fair value model, the deep MMT model. We've been using that with already tremendous success. It's only been live for like 2-3 weeks, so obviously a little recency bias, but really figuring things out well. And then Bijou, part of the dashboard that he's built up, adding just quite a few more layers to the gamma hedging data that we've used, putting those together. It has been spooky good. Again, only 2-3 weeks of results, but we've been really crushing it over there. If you're not an active trader, active investor, and you just want to support us, you can also do that over there too. And any of the kind of like academic open source stuff, we put that there for immediate access once we build it. So patreon.com, MMT macro trader. I'm going to get back to the fun stuff though. I don't know what the fun stuff is.
Lots of fun stuff if you just look around. On Twitter, I come across every now and again another little pocket of MMT, or ferment, I should say, amongst little groups of economists that don't show up on the radar all the time. So there's all sorts of pockets out there, I think, that we're not all aware of, and that maybe our friend over on at Real Progressive, Steve, is not aware of. It's like I think the educational work that's been done by Stephanie Kelton and others, and Pavlina and Warren and Bill in the past, it still hasn't really borne full fruit. And there's all sorts of little pockets going off everywhere. And, it's interesting to observe every now and again. A new MMTer pops up. Get another follower.
A new MMTer has joined the fight. Or join the battle. No. Join the battle. That's the. Smash No, what's the name of the game? Smash Brothers, right? Yeah. Right? Yeah.
So we got zero shot there on the chat going away, popping off really nicely. Thanks for joining us, by the way, and the interesting little quick comments there. Have you looked into Steve Keen's school, skool.com course? I know it's a bit pricey, but you can maybe talk to him nicely and get a discount. He's got folks there. He's trying to get more what he calls rebel economists. I think that's how he branded it, rebel economics. Trying to get people who are interested in complex systems onto that group as well. And it doesn't matter if you haven't done economics. If you just do any sort of complex systems modeling, so either systems dynamics, differential equations, or your agent-based stuff, might be interesting to check them out.
Wow, this is a shot, man. I'm glad you're jumping in here. I appreciate I'm going to pronounce it FINAC. Python double entry bookkeeping library. Never heard of that one. that is new to me. I'm actually putting that in my notes right now.
Put it in the notes. What you said earlier too, Douglas, about the when you asked for anyone who's got some data or series to look at regarding effects on inflation and that. Effects of the interest rates and that sort of thing. So you want to keep a list of those too, right?
Yeah, I've got a list, but if anyone wants to add to it, I can. One thing did come to mind, and then it left my mind on that one. But so I just wanted to say those words in case it came back into my mind. Anyway, tried it, didn't work. Let's see. I want to maybe change course. I've got two things I really want to talk about tonight, and whoever is quickest to tell me what to talk about next, and I'll give it like 5 seconds, and then we'll just choose one. Do you guys want to go over the Bob Murphy? Bob Murphy first.
Murphy.
Okay. Well, never mind. Bob Murphy.
Check.
No, Bob Murphy. It is. Bob Murphy. Okay. Bob Murphy. It is. Bob Murphy did some tweets.
Did some tweets. Yeah. He's always good. He's the gift that keeps on giving.
He really is. Bob is. He's so. I think what I like about Bob is he too is in a heterodox school, right? He's against the grain, so he's
not afraid to mix it with the mainstream economists, on his side of things, throw in a few punches here and there.
Because it's very easy to say, I'm the establishment, everyone else is cranks, crackpots, and quacks. Bob can't say that, so he's at least willing to engage, and he's with that being said,
it's like I think Ryan and Adam said on Applied Energy podcast, he's like one of the best MMT educators out there.
I'm sorry, was
Bob Murphy.
Oh yeah, absolutely.
Or Josh said that in our chat, or someone said that. Yeah. Anyway, it's no kidding, right? I'm really into that. I like if you find someone who's willing to engage in debate and toss around their opinion and ideas, and then you get a whole bunch of people sort of from the MMT community, saying, hang on a minute there, we're not on a gold standard. Maybe you want to be, but we're not. Then it just it gives some good amusing reading for the finance geeks and nerds. Yeah. And basically, let's face it, it's like even though some of us might not be professional economists, it's still good stuff because we're at the sort of geek level, or if you're a educated or a credentialed economist or finance person, this is where MMT talk and debate and discussion exists, right? In society, it doesn't exist out in normie culture. And so if we're ever going to have people vote for governments in a democracy and get more MMT aware policy, it's just got to come out from this community of geeks and heterodox people, and it's got to get into the mainstream. It's got to get into the universities. It's got to get into primary schools. Get more of these cartoon books from Steve Keen and Randy Ray and others, and it's sort of a really long project. I feel like we're contributing to it at a certain level in a certain space, but there's so many other spaces where MMT needs to go before we get any really progressive policy movement. By the way, just remind me, I want to go back to policy because what Charles said in the chat was, I think, really interesting when he MMT is all descriptive, no policy. It's like I actually came across an MMTer the other day who was actually kind of like saying that. It was so cringe. I was like, dude, I wanted to slap him. Anyway,
Charles, you gotta dive a little bit, not dive, flesh out epistemologically suspect. I don't think you can say that about the data, but Shad, man, I'm glad you joined because you and I feel, we're seeing eye to eye, and it's really funny. I was an Austrian too from right around 2000. I mean, it maybe a little later than 2000, but it was a 10-year period of kind of Austrian small government stuff, and then too, Steve Keen and Warren Mosler convinced me otherwise.
Epistemology is a broad term to wave at someone and say you got it wrong.
It's kind of
anyone can take data or information and twist it around and do wrong things with it. But data is data. If your measurement instrument is fine, if your thermometer isn't busted, it's an MMT looks at several thermometers that are what I would call not dodgy. Like they're pretty robust.
Yep.
You can see it. They're not subject to all sorts of noise like a lot of prices and so forth are. So I think on epistemology, MMT has a big advantage because we look at the macro, and it's accounting identities and balances and balance sheets, which unless you break the law, they're going to be pretty good data.
Yeah.
And so it then comes down to what you do with the data. But I'll just quickly mention danger zone on RFK Jr. entering the race. Marianne Williamson understood MMT, I think. So did a few other candidates. You got John Yarmouth and that. So there's no reason why anyone running for president can't understand MMT. They can all understand MMT. It's a matter of whether their handlers, their advisors, the people who influence them, allow them to, basically. Like you look at Joe Biden, I'm pretty sure he's got a lot of handlers who filter and protect him from the knowledge of MMT.
I think he's got handlers right? Just to help him walk, let alone.
He's got all sorts of handlers.
Sorry if you're a big Joe Biden fan, but
sorry to dunk on your leadership.
Dude's getting old.
Anyway, back to Bob Murphy.
Yeah, Bob Murphy. Charles, man, listen, I appreciate that we're all going to have a different lens for how we're going to interpret the data, where we're going to start from, what are our core kind of presuppositions when we're going to come to the data. What is it that we want? I still think which it sounds like you're convinced. I mean, the framework of MMT in terms of how it describes what actually plays out in the economy is a valid thing. So I think I get what you're getting at. There still is kind of a philosophical underpinning to an economic system. So that much I think I can say. Yeah, I see where you're coming from.
Yeah, because if you've got MMT in the USA and people have a kind of an Austrian school Ayn Rand type of bent, libertarian individualism, that's going to reflect in your policy, even if it's an MMT system. But you got to start with what is the currency, what is the monetary system, and what are the operations, which is where MMT begins, and then a lot of policy follows from that. And it can be very libertarian, sort of light touch of government, if you want it to be, if your culture wants it to be.
Yep.
And so you can have an Austrian school version of MMT, but you cannot have the gold standard and use high interest rates to maintain demand for your currency and all that, because that's just terribly regressive. And it was like, it's just not a sensible sort of a policy outlook.
Yeah.
So most Austrian schools just get it so badly wrong because they're so wedded, unnecessarily wedded to gold, and having government be beholden to private interests because they think the private market and complex systems figure things out in a superior way to government leadership and policy, which is a gross overgeneralization. Sometimes government leaders get it right, sometimes they don't. And I can talk more about that later on if we mention Pavlina Cherneva in her interview recently. But anyway, back to Bob. If Bob Murphy I think he accepted that Warren was right about the money, that it's a tax collector who creates the demand for the currency. And so all that Bob is doing often is like saying he's living in his own universe, like, well, but what if we were on a gold standard and Austrian and everything?
Yes.
And he sort of conflates it.
Yep.
He's conflating it because he's imagining it's his universe and then saying what the policy should be.
Yes. Yep.
Which may be correct in his universe, but that's not our universe.
Yep.
So it makes for some hilarious kind of reading. Anyway,
so let's go over this and then just kind of go at it. I'm going to do an article podcast next week, so I want to anticipate objections regarding my tweet below. He had a tweet with Stephanie Kelton. His argument is that the government being the monopoly, or this argument has nothing to do with the government being the monopoly issue of sovereign currency. He's essentially saying like, the classic sectoral balance thing, right? Can apply no matter what. And then it goes off the rails. He says he's not saying that Kelton's wrong, but to cut to the chase, even if the U.S. used gold coin as money, Kelton's chart would have been the same pattern. Look again in her definition. He's saying that accounting causes a government deficit to equal the private sector surplus. If we ignore the foreign sector, this is exactly true for every time period. So even if the government had nothing to do with the issuance of money and Americans used gold that were stamped by private mints, Kelton's sectoral balance logic would still hold true. For example, suppose in the year 2020, the government spent 1.5 billion gold coins and raised 1 billion gold coins in tax revenue. So it had to float the 500 million gold coins worth of treasury securities to cover the deficit. The deficit for the U.S. government would be 500 million gold coins. This is Bijou, the first part. So I stopped right here. And this is the first part where I just couldn't do it because I quite literally, I pulled out a piece of paper and I just started doing. I just started doing the balance sheet operation. I'm like, well, first things first, the government can't spend 1.5 billion gold coins. It doesn't have it in the first place. It doesn't have gold coins, and he does this thing. He doesn't have the coins.
Well, you could do that. Yeah, you could do the whole thing of like getting, neutron star dark matter.
That's a very good point. No, but even if it
cover it in a little veneer of gold.
But even if it did,
bring the gold out of it,
it still is taking out of the private. It still is taking out of the private sector. So, it has to get the gold first, right? And to me, that is the first thing that he misses, and he very sneakily slides in there. And I tweeted this out to him. Very sneakily slides in there. Let's see. Real money, right?
Not being consistent.
He actually, that's what I'm saying. In this scenario, the government can spend what it doesn't have, and he conveniently slides in treasuries here to make up for the fact that he doesn't actually have real money in his system, right?
Right.
And here's my...
He has to create some promises to pay.
Exactly. Yes, exactly. That's what they are. They're promises. Now the government can issue those in perpetuity, right? But all we're going to say is, knock yourself out and go ahead and do that, right? That's fine. We can set that system up. But if you're an Austrian and you don't like a coercive government, my part two on this is that, but why do you do this? Because it forces the government to be coercive in order to promote the public good, right? The government now has to go out and steal gold, right?
And gold. Pirate and everything else.
Yes, and gold is
Draconian taxes.
Gold is the real resource of the private sector, right? When you spend
the gold miners who dug it up in the
exactly. When you or whatever, what at the end of the day though, it's a real asset. It's a real asset, right? So that some
energy to create it. Yeah.
If you want a government and you have any sort of, if you can at least get to the point where we're a society that wants to work together as individuals in a collective, and that is best expressed through some sort of government. The best we've seen it done is in a democracy where the most amount of people have as much say as they can, and we have as much representation as we can, where power is spread as thin as possible to as few or to as many people as possible. If that is at least a base case that we can agree on, and the worst thing that can happen is some sort of coercion, you want a fiat system. Right. What up, Ty? Welcome.
Exactly.
Welcome. You want a fiat. You want a fiat. You want a fiat system, because then the government never has to be coercive. It doesn't have to come take. Yeah. It doesn't have to come take the real resources. It's taking its own currency back that it can reissue. It's not taking. It's not taking the real resources, the real wealth out of the economy to do what it needs to do. Anyway, I'm gonna.
No, this is a great point. This is a great point. So most Austrian scholars or libertarians, they want power to be in the private sector. They want the private sector to be sort of dictating to the government.
Which I do. Which to a certain extent I do too. Like I get that sentiment, right? Yeah. But keep going.
But But how do you do that in a way that doesn't create Pareto distributions and all sorts of effects where you just get a powerful sort of oligarchy, private oligarchy, which is what we got, which is basically what you get under neoliberalism in a way. People say, oh, well, these command economies like China have a centralized planning system. But, I think Michael Hudson is correct when he said, well, so does the USA. It's all centrally planned by Wall Street. Essentially, maybe Silicon Valley a little bit. So you still got a centrally planned economy in the USA.
Yes,
you're not really in a democracy or part of your government. So stop fooling yourself that works. It doesn't work. So the better way to have a better economy where the private sector, aka ordinary people, are really controlling things is to enhance democracy. And so you have a government which is where basic universal services and all that get sorted out, and you can run a public sector that lowers costs to the private sector, and you basically do the Douglas MMT macro trader system of infinite democracy. So you get to a kind of a version of libertarianism, a maximal freedom that you really should want with the fiat currency. The gold standard, I think, will drive you in the opposite direction. It'll create, pirates, oligarchs, people who hoard gold, and I just don't think they've gamed this out right in their heads. How it actually would all work if they had their way.
Yeah,
but of course, we have a common enemy, Bob Murphy and us, of the neoliberals.
Yes, yeah.
Because they also want a sort of feudalistic society where all the experts and credentials, economists and everyone who thinks they know it all is running the show and telling everyone what to do because they know best. But yeah, I prefer our version of infinite democracy. But I think you're right. It's exactly right. If they just thought this through a little bit harder, they would realize you don't want that constraint of a gold standard. They called it the cross of gold in the 1800s because it was so destructive to working class and to people who couldn't go out and mine gold. Or hoard the gold.
Yes,
you have to either mine it or hoard it like a Bitcoin. By the way, don't get me onto Bitcoin. I had another. Some stage, I'm going to go and look deeper into that Bitcoin and stuff and bring it up in a discussion if we can at some day, but not today. This is continue with Bob Murphy and see if there's anyone in the chat. So it's interesting the way he's actually a very sneaky guy, Mr. Robert Murphy.
Sneaky.
In all these little hidden assumptions all over the place.
Let's see the private sector as a whole. I mean, at the end of the day, he's absolutely right. You can apply sectoral balance analysis to anything, right? It's not right. It's not a. It doesn't have to be an MMT, a floating exchange currency.
Yeah, exactly.
So he's right about that.
Yeah.
And then he talks about if the there he is. Okay, a true sectoral analysis is a general analytic tool for a very long time, but an MMT contribute was that only the government sector isn't revenue constrained. That is, financially sustainable for government isn't applicable the way it is for non-government sectors. Sums it up great. That's why he's the GOAT. He's absolutely right there. So that's the Bob Murphy tweet. I don't know.
Yep. Interesting stuff. I don't know. Yeah, I think a lot of critics of any framework of analysis or ideology or whatever will cherry pick what they think about it, and they'll play the whole game of, yes, you've got this correct, but you've got something else correct. So they can always pretend to be honest and say, okay, your accounting and your analysis of sectoral balances is okay. Okay, I accept that, but here's where you're wrong on something else, and then they go off and straw man you. So it's it's all stuff. What else did Warren say there?
I think that was it. That is just. That is one thing I do like about Bob. I don't think he's trying to straw man. I just think he's a little too stupid to fool the. I'm kidding. He's not. I really just think he has some kind of presupposition, he has a worldview that has to be a certain way, and I think it comes from a very individualistic Christian tradition that is, if you live in the U.S., you know exactly what I'm talking about. I'm not trying to be degrading about it either, but you know exactly what it is. And I think in his world, there has to be kind of I don't want to say an evilness, but there has to be skepticism about the government, right? And that ultimately kind of individuals will know best.
I think in a way that's healthy. That whole segment of society is suspicious of government is a healthy thing to have.
Absolutely.
I don't want to. I don't want to get rid of these people. It's just interesting to debate them and see.
Yeah.
Because if you've got a basically a good moral stance on not allowing power to get concentrated anywhere, then I think that's valuable. And so the thing is, you got to think about it though. What if you shrink your government so that the power is concentrated somewhere else? Because if you've got real resources to move and shift around, you're going to move and shift around.
Yep.
And so someone else has the power in that case. And so it's a matter of balancing the system and putting more power into ordinary people and having more of a democracy, not less. And I think that's just the mistake that Austrian scholars and Ayn Rand followers and all that make. They think if the government goes away, the power gets more evenly distributed. And I'm telling them, no, it's the opposite.
Yeah.
Government goes away, the power just you get warlord type situations. What they also have in a moral sense that I think is good is they have a trust in ordinary general humanity. They think that if the government shrinks and goes away, of course, I think we all, probably everyone in our chat, at least, I don't know, I don't want to make any too big an assumption on everyone who's in the chat, but we certainly have governments who are way, collect way too many armaments and have far too much power to destroy humanity in really bad ways. The war machine and military industrial complex and all that. So in a sense, you can see where the argument comes from for smaller government, because you do want to sort of shrink, in quotes, shrink government in certain areas. And get it out of subsidies for the military industrial complex and all that sort of rot, and grow government in other areas, which is supporting the working class, supporting real goods production and so on, lowering costs to private firms and enforcing some sort of minimal set of laws that make society a sort of decent place to live in without an oppressive police force. You sort of want to get rid of policing per se and make it more community-based, looking out and caring for each other, more of a safety thing than a harsh disciplinary thing on poor people who are like addicted to drugs because they can't find any jobs, because you're not funding, you're not injecting the currency to give them the jobs. So all that side of Austrian school or classical libertarianism is a sort of good thing, because they want, but it's premised on the fact that it works if people are really good. If you've got a society of people who are really good, you can tolerate a few, bad apples, and you can have a system that doesn't degenerate into warlords and feudalism. But I don't think we're there yet. I think humanity as a whole has got such a long way to go to mature that we're going to have this sort of messy system of semi-democracy and a reasonably big-sized government until we understand how to avoid great power getting concentrated in oligarchs and industrialists who just amass a huge amount of power. And where is their power coming from? It's coming from hoarding the currency. So it comes back to monetary systems and that sort of thing, and how you balance an economy properly. So what's that to say? Even though you got sectoral balances, you could have a massively unequal, unfair society, even though the sectoral balances still work. MMT is wrong again.
Anyway, that's Bob Murphy. We'll see. We'll see what is. I'm not going to listen to his podcast, but we'll see. We'll see where that goes. I know Rohan Gray and him got into it, so I haven't had a time to reread the. I haven't had a time to read that.
No, I haven't had time. I mean, I've been doing a bit of coding and interesting stuff on pipes and things. Really undoing me. Actually, that little anecdote, maybe I get it off my chest. So last week I had a bit of a intersectionality with piping.
What's piping? Like in the house?
Piping. Oh, like you have some. Say you're a bit of a crazy person and you want to write some script in Python because it's just easy to do.
Oh,
but
yeah.
Then you want to have something running fast.
Yep.
on your processor, right? Because
okay. I didn't know if you literally meant like you're tearing up your house to put pipes in.
No, I am. That's the intersectionality.
Oh my god, that's hilarious.
I get to do it.
Oh my god.
Yeah. So last week I'm doing this. I'm trying to figure out these pipes, and I'm coming up against read and write blocks, right? So you write your Python script might write information into a pipe, and it's file in first out sort of pipe, and then your other program running wants to read it, but one of them, whoever sends the request to read or write first, gets blocked. Okay, so the program is hung up until the other program reads it, and vice versa, right? So I'm trying to figure it out without having to do all this threading nonsense. And in the end, I figure out I'm going to have to just have one system run a thread and read the pipe in the background and so forth. So it's all very sort of complicated because I like to keep the code a little bit clean and use as little resource as possible. That's just a sort of I don't know. That's a personal foible, I guess. I like sort of clean, good, elegant code, but it, just as important, and this is a terrible thing to have if you're not really a professional programmer, is to also worry about speed and performance, because certainly if you're not a professional programmer, to worry about speed and performance is a little bit silly, because you're not going to be able to do it unless you really understand the stuff. But anyway, so I was mucking around with these software pipes, right? And then at the same time, drain outside our kitchen is overflowing. So I had pipes and pipes. The other thing is about pipes.
The pipes are calling.
I want to plug the HBO or whatever show it was. I don't know if it was HBO, but one of those networks, media networks, did a great little mini series, sort of one season comedy with a Kiwi actor playing the lead role of a CIA guy. They actually never mentioned the CIA, I don't think, the whole thing. It's called Patriot. This Patriot is hilarious. So many industrial piping jokes. I just found that whole show to be very dark humor, very black humor, and very, very excellent watch. If you get a chance, check it out.
Will do.
Why am I mentioning that? Yeah,
will do.
I haven't looked at any TV or entertainment for yonks. It's like, but anyway,
I don't get to watch much TV.
Whenever I find one of those things, if you want to recommend anything like that's my flavor. I like those kind of shows. They're quite good.
I got to say in the chat real quick, someone had mentioned the opioid crisis and possibly leading to the issues with the Rust Belt and everything like that. And it's interesting.
Oh, wow.
I won't get too much into it, but the opioid crisis is near and dear to my professional career in terms of what I actually do. And I've done some research in that area, and my specific focus is elsewhere, but I know it's been looked into, not specifically what happened to the Rust Belt, but there are some interesting trends just in terms of kind of drug abuse and
right,
kind of economic cycles and stuff that I've noticed, but unfortunately don't have the kind of professional time to actually make any connections there. But I think to a certain extent I actually do think MMT can give a lens to that as well as it could many things.
Oh man, you're talking about unemployment again, right?
Yeah, yep.
Because it's a huge driver of all these social pathologies is unemployment. And once you have the MMT lens, you realize unemployment is completely unnecessary.
Yep.
And the source of it is government.
Yep.
Talk about becoming an Austrian schooler. It's like, yeah, we want to get rid of this government that's causing all the unemployment.
Yeah.
Oh my God. But yeah, I mean, but the MMT lens just lets you understand what your government really is doing and what they're capable of reversing the whole situation.
Yeah.
And
yeah.
Maybe I could talk about Pavlina in that case. Just get that off the checklist. Unless you want to move on to another topic.
Whatever. Yeah, if
but it does. I think it's relevant to opioid crisis and that. I know the chat's going off about blockchain and Bitcoin and all that, which is really an interesting discussion.
The land value.
I'm not going to be able to follow it today.
To
Sorry, chat. But yeah, at some stage we should have a special on Bitcoin and that, and do a bit of a laugh. Because I feel like the chat. By the way, I love the chat, but I think we've got like some who are for the crypto and some are against. Well, anyway, let me come back to that later. Let me just quickly shout out to Pavlina.
Do you want me to show your? Do you want me to show your screen?
You don't need to. Oh yeah, people could read that one instead of just listening to my voice if they like the eyes on the screen. So the link there, I could pop that into the chat if you want. That's just what was that? Oh yeah, that was Macro and Cheese. That was Stephen Grumbine. It's got a timestamp on it, which I'll just drop into the chat here. Because
I can do that so you can talk. Yeah.
Oh, can you? I got it. Don't worry. That's a point where she starts talking about a geographical distribution of unemployment.
Yep.
And so it's like, even though your central bankers and so forth are saying that they've hit the Nairu, which is a fictional construct really when you understand floating exchange rates. But anyway, they say when you've hit the Nairu, which is about 4% unemployment, you've got full employment, even though you've still got like millions of people unemployed.
Yeah.
Completely tragic misunderstanding of the currency system. But anyway, she points out, and it's a really good point, that despite maybe you're at 4% unemployment, you've got areas of the country that are double-digit unemployment, and that's official figures. That's not counting all the people who are not even registered, who are underemployed, working but really struggling to survive. And these are persistent geographical, regional disparities in employment. So just because you're at a Nairu, just because you're at what you think is technically full employment, you're not. There will be vast areas of your country where people are just struggling to survive. And you talk about opioid epidemics and crises, that all comes out of that struggle for survival. And it's just gross, and it's just terrible how people just misunderstand this. When you think about it, these vast regions, it's a direct result of the fact that you're running these austerity policies and Nairu and that. And this is why, again, UBI is just a terrible thing. It just does not fix it. And a job guarantee is really, I mean, I've looked around for other options. Cryptocurrency is not it, man. None of these, harebrained schemes are the way to fix society, make people whole again. You've got to have a job guarantee as a floor, just to begin with, a basic, decent living wage. Allow people to get on with life, and that really is getting the government off their back. If only people understood,
Yeah. Yep.
The government can type in numbers in a bank account. If you are willing to do some work in your local community, you don't have to move. You don't have to beg anyone for a job. Government guarantees it. It's your claim on the state. Your claim on the state, not a UBI, which is a UBI is your claim on someone else's labor. It's just a terrible dystopian kind of a thing as a UBI. And so I think if you've got the time, just give Steve Grumbine a few likes and check out Pavlina's work. Last thing about that is I think what we were talking earlier about policy, right? Which Charles is it Grip or Gripe? How do you pronounce your name, Charles? In the chat was talking about he did the whole ironic, MMT has no policy thing, which I agree with. It's like MMT is chock full of policy. Narrow MMT, which is the framework for understanding monetary system, is what gives you all the policy ideas that you could have to, and it's a smorgasbord. You can do whatever your culture wants with your currency system, as long as you create the demand for the currency, and then you can move resources out of the private sector into the public sector to satisfy whatever your culture will is willing to do in terms of moving resources from private to public sector. It's a huge amount of policy space. So the thing about MMT is it creates a policy space, or it shows you how you are creating policy space, and so it opens up a whole lot of policy space. It's like you're no longer so terribly constrained in your policy, and you don't have to be export led, and you don't have to raise revenue, and you don't have to do all these other things that constrain what is utterly totally possible if you understand MMT. And so one of the things is Pavlina at the very end of that interview talks about United Nations, and she makes a good point. It's like at the United Nations, people like critical of United Nations. They had some food program corruption and all that sort of thing, and it's dominated by the Security Council veto and all that. But putting all those totally known problems with the United Nations aside, the UN really overall is a huge benefit to society. One of the problems is they don't have any power. Right? There's talking about things, but they actually do, because governments fund them, and they have a whole lot of educational programs. It's infested with neoliberal thinking, right? But they've also got very, very good people working at the UN. And so Pavlina mentions a few who there's a special rapporteur who's really into the job guarantee and trying to promote it. And so I think you could say, despite all the warts and things that the UN has got, and the fact that they don't have too much power, but they run a lot of programs in poor countries, and that I think it's fair to say they probably got more MMT awareness and more MMT people on board there than in any parliaments, I think, anywhere in the world, I guess. I'm just guessing. That's just a speculation. You could prove me wrong later, but I think that was encouraging. I thought it was really encouraging. And if there's a bit more dialogue between the UN and world parliaments, then not the whole sort of Davos forum type stuff, but just people who are really good people who like to dig down and get work done. And last thing on the unemployment and job guarantee, and Pavlina, she was responsible for planning a lot of the Argentinian Jefes program, the job guarantee, lightweight job guarantee in Argentina in the early 2000s, which was phenomenally successful. They cut it down because they were chauvinists, essentially, not because it wasn't working. It was working too well, a bit like the Giesel currency experiment of Burgel, Austria, back in the 30s. But anyway, it was a phenomenally successful thing. And then the other one in the world is the rural job guarantee in India, which is pretty popular and pretty successful. And they're trying to, the rural people are trying to, especially the youth, are trying to get more out of their rural job guarantee. I think it was pretty much fixed in law now that the right-wing government's finding it hard to get rid of it. And during COVID, when people were like sent home, or they had some lockdowns or whatever they did there, they were demanding it be raised from 100 days a year to 200 days a year on the job guarantee. Again, so it was light. It was like you couldn't use it every day of the year. You restricted to 100 days of guaranteed guaranteed work and income. So it was a little bit regressive, but it was phenomenally successful. And I just like to always say, think of any countries where a job guarantee might be subject to corruption and not work. You might think of places like or currently the Ukraine, or your Central African republics, or Argentina, or India, where you got a massive amount of sort of local corruption. So, in Argentina, it's the oligarchy. So it works in those countries. You can imagine what it would be like in New Zealand if we had a job guarantee. It's incredible boost to our economy, our way of life, our standard of living.
Maybe New Zealand wouldn't be in recession as they are right
now. Yeah, exactly. I mean, that is so true. We do have a tight labor market because we find it's hard to attract people now to New Zealand, and there's a lot of job openings, but it's hard to fill them because we have too tight an immigration policy, and we're too neoliberal in that way, and that must be contributing, I think, to that recession you mentioned earlier, as our immigration sort of fear mongering, and and just the general conservative nature of. New Zealand is farming. It came from really farmers, mostly, were the settlers in New Zealand, and they still have a strong voice, even though they're not so big a sector of the economy nowadays. But it in our culture is to be a little bit conservative in that sense, fiscally conservative, socially liberal, and it's the fiscal conservatives who kind of have the sort of dominance. And that's true of the current Labour government too, who are just very, very neoliberal. But anyway,
I want to jump in here. Some good chat going on, Charles. I got a question for you. Really, anyone else? It's just a broad question as well, because I hear this from a lot of different standpoints, various, schools of thought, just about the meaningless work or the bullshit jobs, that discussion. Because one of this is kind of a thought that I had, and we'll run with it and see where it goes. But you oftentimes hear about the bullshit jobs, the meaningless work, people just doing nothing, which I understand exists, right? I mean, I'm not saying that doesn't exist, but how do you know ahead of time that it's meaningless? I understand after the fact you can always tell if what you were doing added no value to society, but I don't understand how you would know ahead of time that it's not going to add any value to society. My point being is, one of the questions I got asked one time was like, hey, if we go back to zero interest rates, how do you stop JPEG images? People borrowing to buy $50,000 NFT JPEG images, right? And there were two parts to that kind of need a response. One, I don't actually think that's a zero interest rate phenomenon. And two,
right.
Look, obviously, Bijou, you and I could tell that NFTs were not going to be the thing. But you don't know that, right? And to a certain extent, part of the reason why I like the idea of job guarantee, part of the reason why I like the idea of running an economy as hot as you possibly can, there's an answer. Werner's disaggregation of credit quantity theory. Okay, I'll look it up.
Oh, really?
Okay, so apparently there's an answer to understand if something ahead of time is is meaningless work or not. But my argument would be, you don't know ahead of time, right? Like, it turns out the Zune music player was, I know who Richard Werner is. I've just never heard of his disaggregation of credit quantity theory.
Oh, that's like when you have a lot of credit created to just go into financial
okay.
products and speculation versus real economy.
Okay. That is fair.
Werner is on the right side of that. He's like, it's too much of it is created for nonsense and not enough for real production.
The fire sector is a very good point.
It's an easy way to put money in and slop it around. And,
it's a
whole lot of volunteers.
To a certain extent, though, I guess probably should be illegal. A lot of the financial engineering stuff that goes on, that's a complete waste. But my bigger point is, with things like NFTs or things that are very obviously going to flop and are just not things that we want. How do we know that ahead of time? And I know there was a lot of, obviously $3,000 bikes for your basement were unnecessary, right? I mean, there's a lot of things that are right. We know this, and meatless meat, right? Wasn't going to succeed, but you don't know that until you allow the free market to do it. And I think that from my perspective, the point that I would push back on is I'm okay if 100 endeavors fail to bring any meaningful product to the market, right? Because we don't know what it is that we want ahead of time, and we shouldn't have a market that is systemically linked to the 10 companies that are in it succeeding, right?
You also got to look at costs and benefits if you go Charles's analysis, because having gold or Bitcoin or some sort of constrained currency. I mean, first of all, I don't know how to. But Bitcoin is just a token, so it's like fiat, but you artificially limit it like gold. It's just a crazy kind of system. Why are you doing that? But if you're going to impose an artificial constraint by policy, adopting gold or something like that as your currency standard, and you're limiting using a gold buffer stock, then I don't see how you avoid unemployment. And so, which is worse, to have some inflation and a little bit of excess conspicuous consumption, or to have unemployment? The only way on a fiat currency you have unemployment is because people don't understand the currency. So if you want to maximize output sustainably, and on a fiat currency, you just ration the resources that are not sustainable. I think Steve Keen would tell you how to do that. It's got to come from policy, and where does that policy ultimately come from? It's gonna come from society once people sort of understand the monetary system. You don't have that flexibility unless you have a fiat currency. So, are you going to tolerate mass unemployment just because you think that's the only way to constrain consumption? No, that would be ridiculous. You want to have a good society. You want to constrain conspicuous consumption with proper rationing on energy use, just like we do. We even do that in New Zealand, for heaven's sake, with water. Sometimes our water stocks get a bit low, go through a bit of a drought period with the forget which one it is, El Nino or El Nina, but one of them. And you're supposed to then. We don't actually have to go to metered water at the moment, but you're supposed to be careful about how much water. But if it got really critical, it probably never will in New Zealand, but it could very well in Australia, is you'd have to ration the water. Okay, you don't ration the money, you ration the real resource. And so I think it's just MMT in a fiat currency just gives you all of the policy space that you want, that you need. And it's a matter of just choosing the right policy and not allowing overconsumption of goods that are not sustainable to occur, or goods that are, heating up the atmosphere and oceans, or polluting or whatever. So that would be my story. You got to understand a fiat currency is not treated correctly by current world leaders because they don't understand it. They still think in terms of fixed exchange rates, which is in fact thinking in terms of a gold standard, effectively.
Yep.
And that's why they get it all wrong. So if you have a fiat currency, it's not the fiat currency that's the problem here. It's the fact that people don't understand what it is.
Yeah. This is I got to bring in what Charles' point about the reason that you want Bitcoin is to store value. I read that wrong.
No.
Store value to a lower time preference.
I think it's a bogus argument.
There are
ways to have people store value with a fiat currency. You just give them give them the bank term account or whatever. So they have preferences over time if they want. So you allow banks to issue time deposits and that sort of thing. I don't need the crypto.
I would still say the better store of value is to invest that in productive outcomes.
Yes,
that's the real store of value, right? The real store of value. The real store of value is getting the money out of your hands, really, by consuming or investing. And
indeed,
yeah,
that's a healthy society. You want to increase. You want to have good turnover of money. You don't want people saving. You want people spending.
Yeah.
The problem is you don't want people spending on, airline flights and, rocket jets all over the place willy-nilly.
Yep.
So, I don't think, theoretically, right, no one needs to have any saving.
Correct.
If you think about it, you don't need any saving as long as you've got enough income.
As long as there's always an income
to spend when you need it. Like, when you need to get a sandwich or a coffee, you can go get one. That's like what you get with a sort of a job guarantee kind of a system. What is creating the need for saving is the austerity in the first place.
Yep.
And people hoarding money, so they are withdrawing currency from circulation if they have a savings account, or put it into cryptocurrency or any other type of savings vehicle that is not being used to create real output. Mm-hmm. So you're restricting what's possible for your society that way. If you have too many savers who are just purely saving in a sort of financial asset, or instead of in a real productive investment.
Yeah, Charles, by the way, I'm not talking about the stock market per se. I mean, that's not. I would make changes to the stock market if I could, but
we'd make changes.
Yeah, I mean, for the time being,
eliminate all speculative gambling.
For the time being, let's exploit the hell out of it.
Paradox there.
Let's see. What was I going to say? Still a lot of good questions. I want to hit before hour 3, and we kind of go off the rails here. I want to hit one final thing, and again, to preface this as well, I'm going to be on the Steve and Friends show on Saturday. If you want to catch me on there, I'm on for 2 hours, I believe, with Ty Keynes. I'm filling in for Steve Keen himself. They said they wanted to try and get as big of, if not bigger name than Steve to be on the Steve and Friends podcast. So they found me, and I agree. My wife, by the way, is in my office right now just laughing her ass off.
Oh yeah?
Yeah, she's smelling the bullshit. I think is what's happening. But I'll be on there. So this is to preface then kind of where I want to change gears to. It's really distracting to hear her laugh quietly. It's kind of funny. Anyway, I want to jump back to a Twitter thread. And guys, we can get back and chat too if you want to kind of the discussion that you guys are having. But hopefully Ty is listening, because what I'm going to do is kind of make the case that I laid out on Twitter for what I think is actually happening with the interest rates and what we're actually seeing. Because I still want, here's what I really want. I mean, I think it'd be an instructive discussion for everybody, is someone who can kind of fully, to the best of their ability, to understand what it is that I think I'm seeing in the data, and then say, nope, here's what you're missing. Here's why I think eventually interest rates are going to cause a recession or something like that, right? That this isn't going on. I feel like I've gotten some good feedback, but I think I have a defeater to kind of everyone that's saying like, nope, this isn't how it works. So if you're in the chat and you can kind of tell me otherwise too, let me know. What I try to do is color code everything, so you knew kind of what was flowing where, what was impacting where, in terms of what I thought. But the base case, and I think everyone here is probably in agreement that higher rates are going to increase the term structure of prices and the future cost of doing business. Here's kind of the new part that I think really pieces everything together in my mind, that allows this kind of whole circuit to kind of spiral higher, if you will. It's just, I do think you can see an acceleration of income demand. I'll explain what that is. Maybe there's a better way to put it. I think it's kind of a defeater to it's all the money's just going into a high propensity to save. I think what defeats that is we see an acceleration in the demand for higher incomes, and then because of that, this is going to supply the higher rates supply the additional interest income to the private sector, which ultimately supports the growth. Like I said, I've got 4 nice little charts here, or 4 little slides here that show all the different charts. So rate hikes, obviously they go higher. And one of the things that they do is they increase the term structure of prices. We've gone over this before. Pretty obvious when you look at a term structure of any commodity that isn't beholden to a ton of outside forces. Gold, wheat, both show this. Higher rates, forward price goes higher in the term structure. I'm not talking about inflation at this point. I'm talking about the term structure price or the future cost of doing business is going higher. And then just kind of a compounded interest chart here again. $1,000 today is the equivalency at a 10% rate. 20 years from now, 30 years from now, 10 years from now at $4,000, right? So we have that dynamic. That all makes sense. Even the neoclassicals would say, yeah, this is what is happening, right? We are making things more expensive in a hopes to dampen demand, right? I mean, I think that's what the hope is. And so my kind of defeater to that is that Chad is just coming in here, so I don't know if I'm just behind or not, but getting a lot of chat in. My defeater to that is, one, you obviously see with the interest payment, the interest goes up, right? So you have the higher price structure, things are going, getting more expensive in a hope to dampen demand. But then on the flip side, you have the additional interest to now, or the additional interest income to now hopefully support that. But the defeater is that money doesn't necessarily make it into the hands of consumers, through the cycle, right?
Yeah.
And this is where this idea of the reservation wage comes in. It's the wage that's required to change jobs, right? I mean, essentially, this is one of my buddies who does a lot of hiring saw this, that the demand for their starting income is just skyrocketing. It's absolutely accelerating. Right. And so what I did is, one, you can just see the chart here on the right. The reservation wage is going higher. There's no doubt about that. And when you overlay the interest rate with the reservation wage, you do see, at least to the interocular test, you do see a little bit of a correlation here, where you're getting an acceleration of that reservation wage as interest rates are going up. But I would imagine it's not. I'm not going to say this is a linear thing, right? Linear correlation, but at the very least, I would say both, since there's more money out there, right, and you have now this higher term structure prices because rates are going up. It makes sense that these are working in concert, right? There's more money out there. People want, right.
Yep.
The other thing too that's kind of worth pointing out here is the velocity, the turnover of money is also increasing. And this is almost a linear relationship. I mean, it really is. The velocity of money increases. And this is a really important point. We actually talked about this last week, and I'm glad Ryan asked about it, because I think this is a really important point. Now, the velocity isn't probably the best measurement, but we just don't have a measurement that would really be how often is we'll call it the real money supply turning over, right? And this gets back to kind of what Steve Keen has pointed out in the Minsky models, is you can get an economy to work without, it'll have the business cycle, but you can have an economy work where, as long as $1 is circulating fast enough, you only need $1 in the economy, right? And to me, that's kind of the piece that I think, again, gets missed when it comes to the demand argument that eventually higher interest rates will dampen demand, at least enough to maybe cause a contraction in aggregate demand. Is you're also seeing the turnover of the money stock increase in concert with the higher interest rates, which continues to support that endogenous system. So this has always been kind of the linchpin in my mind to kind of keep all that held together in terms of why higher interest rates aren't ultimately causing a slowdown. It is a piece that is missed, a combination of the additional interest income. This is how it's getting, in unfortunately a trickle-down way. It's a regressive way, but it is getting to the bottom rung, if you will, of wage earners and income earners. And then finally, just a little overlay too, that interest rates support the higher prices that end up getting established from the higher term structure prices. And then finally, and they actually cause it, right? We've done the Granger cause test. Now, I should say the Granger cause it. There's forecastability there. It points that direction, that it's wages, or that it's increased in increase in the change of CPI is greater caused by the change in the 10-year yield. So, I mean, there's at least reason to believe that the direction of forecastability is that way. And then finally, you end up getting the job growth, you get the economic growth that then heads all the way back into our first slide, which is the Fed sees the signals to raise the rate. So that is my explanation of what is actually happening in the cycle itself, and why I think interest rates are effectively doing what they're doing. And anyway, I mean, tell me tell me if I should be seeing things otherwise. I'm not exactly reading the chat right now as I go through this, but hopefully it's a discussion too that we can get into on Ty's show. And if there's some big defeater, what I would like to know, I don't think there's any like disagreement from the MMT side. It's close to what I'm saying. Like, yeah, that is clearly why we're seeing the outcome that we're seeing, but that maybe at some point you're going to get a dampening of demand that could lead to a recession. I would still say that it's going to be when the Fed finally decides to take their foot off the gas, if they decided to do that for some reason before some sort of exogenous shock hits, before something like that occurs, that could actually be the cause of some contraction. But that's kind of my case. If you watch this after and you want to leave a comment below in terms of kind of bringing up some defeaters, let me know. But that's what makes sense to me.
If you got a counter narrative to that, all that, let us know. Be always interested. I am.
You were tracking chat. What came up in chat?
I think I'm with Douglas. Just with Charles. I think Charles and I a different agreement. I'm pretty sure he prefers the gold buffer stock, whereas I prefer a labor buffer stock. And I prefer a fiat currency. I prefer full employment.
Yep.
And I just think Charles would have to make the argument to me, in the Parliament debate, if we were both in the Parliament, it's like, well, how are you going to guarantee full employment under gold standard? And I think you got to read the post-Keynesians too to figure out where investment comes from. You can get bank credit to invest, or you can use your own money to invest. Either way, it had to come from somewhere else. It's come from past spending. And if you follow the chain of spending and investments, it always has to start with a currency issuer. So who is that? It's the government. And so if they're going to be constrained by a commodity standard, you're going to have constraints, self-imposed constraints. And of course, currency is going to circulate naturally, but the point is you don't want it to be artificially or unduly hoarded. And so it's a matter of policy decision whether you are going to have things austerity via a gold standard or austerity in some other way. And the better way to do it is to have it well designed. And so you should start with the fiat currency for maximum policy space. Okay, that's the important thing. Fiat currency gives you maximum policy space. And then how much you want currency to be circulated or hoarded is then a policy decision. And, I think we would all agree, understand neoliberals are just horrendous at all this policy. So it's not like you can go and look out into the world and say, fiat currency is responsible for all this overconsumption and craziness. It's not. It's the policy makers. They don't understand the fiat currency. So that would be my argument with Charles, is that it's not the fiat currency's fault. It's the people who don't understand the monetary system who have got it all backwards. And maybe we'd have less conspicuous consumption if we had a gold standard. But I think the costs of that are just socially horrendous. And I think you need to think about that, Charles. I don't want to lecture you, but I really do think you should think more about the consequence of a gold standard, and read up about the cross of gold, and don't pin all the faults of society on a fiat currency and Warren Mosler. That's a false attribution. It's just not good thinking on your part, I don't think, Charles. But I really appreciate comments, man. I like being challenged and all that. It's
Amen.
Really
Amen
good.
to that.
So definitely, DM me on Twitter or whatever. I'll go into debate about you and on the merits of Bitcoin. Let me just say though, for Bitcoin and crypto, I really need to read into it a lot harder, because although it's all rubbish, There are good arguments that can be made, and I like to engage in the good arguments and pick them apart and see where they're wrong. It's one of the few things that, like in statistics, just mathematical statistics, I love Nassim Taleb, but also the fact that he was an early cryptocurrency enthusiast, and then pointed out why they got it all wrong. It's really good stuff from NT there. The last thing I think in the chat, I've been trying to follow Zero Shot here, but I think I agree with what Zero Shot is saying, but I haven't been able to fully grok it all and follow it because he's giving them, I think you're a he, giving them in these short bursts of paragraphs and not able to write it out all as a sort of essay format. I really don't like the sort of short format unless it's a short thing. So I think what we've got in the chat there with Zero Shot is a whole series of messages to the chat. I think I agree with them all, but I find it hard to on live stream to put it all in my head to make a coherent story.
Yeah, shot. I'm gonna have to go back. I'm gonna have to go back and reread some of the chat. Some of that stuff looks good. Once the live stream's over, reread my own chat. Good discussion though, man. I love seeing the chat pop off. Once we keep getting bigger and bigger, man, I wish they'd make like channels or something. I know we could get like a Discord server running, but it'd be fun to see something like that. Let people go duke it out in their own channel.
There's a bit of nuance going on too with the chat and Charles, because I think you're using some sort of interesting different definitions to what I would use, like in terms of what you say is wealth. Wealth is increased efficiency in labor. No, it's not. Increased efficiency in labor is being able to produce more with the same amount of labor. That's not wealth. Wealth is what you get out of it. It's the real output, I think. Or if you're, Richard Werner, you've got two types of wealth. You've got the nominal, the financial wealth. You can call that wealth, although that can be inflated away, or it can just instantly go away if your government collapses. Or you got real wealth, which is real goods like whatever you can sell to someone, whatever you can consume is real wealth. So I think there's some definitions that we would have to straighten out, and so you need to maybe choose a different forum to get into more of an interesting, nuanced argument about these things. But you're welcome to try and contact me. That's not real. That's not wealth. So what is wealth, Charles, to you? It's not efficiency of labor. Efficiency of labor is efficiency of labor. How much more you can get out with the same unit of labor. But what if the labor is producing, paper airplanes that they then take a match to and burn? Well, it's like you had some fun making paper airplanes and burning it. So that's not really real wealth. So I don't know what you mean by wealth. I think I know what I mean. It's just things you can consume before they consume. If you own them, I guess they're part of your wealth. But wealth is not a physically well-defined term to me. What about you, Douglas? I mean, wealth is partly subjective, partly objective.
Yeah.
You can say mass is wealth, but also energy. Photons. If you own a lot of photons, or you can produce photons at will, in a sense, that could be wealth. Could be wealth. Depends on what it does for you. All right.
Yeah, I mean, Charles, as I'm seeing your definition of what you think wealth is, I think Bijou's gonna disagree. I mean, not being a slave to work.
You're twisting my words, man. You're twisting the whole idea. Not being a slave to work is a good thing. Okay, is that wealth? I mean, not technically. It's just a good thing to not be a slave to work, and that's why you need a sort of job guarantee. You need to lower the amount of work that any one person has to do, right? And how do you do that? Well, you can do all the efficiencies and things, cut out all the austerity nonsense, get as many people working as possible. That's how you reduce the hours that any one person has to work for what society wants, right? Someone has to be working, so better to have everyone working. And so the amount of time any one person has to work is minimal, Like, 3 hours a week would be great, right? But to get to 3 hours work week, you have to have everyone working. So I agree with you in principle, Charles. But you shouldn't go around defining things in such a inflammatory sort of non-standard way, if possible. I know I do that myself sometimes. With religion, right? I'll define most religions, most religious people. I'll say then they're anti-religion. So I often play those word games and use a bit of rhetoric myself just to make a point. So I think I kind of agree with your point, Charles, is that we don't want overconsumption, we don't want wastage of resources. We do want efficiency and all those good things. So let me say I'll agree with you about all of that. But I still trying to wrap my head around these paragraphs that Zero Shot is pumping out there.
They're good, man. I like it.
I don't have quite a handle on them, but they look pretty good. I have to go back and read them all. Yeah. I think there's a lot of commonality with what we're doing. Yeah, with machines, exactly, Charles. Yes. We put more machines online as long as they're not eating up as much electricity as a worker takes, right? So if you have an army of robots digging your ditches to create new highways and construction things that we need, but they're using up more electricity than it takes to feed a person to dig those ditches, you maybe have to think about making the machines more efficient. But I think I think we all agree here, at least Douglas and me, that the more machines and AI we have helping us out, the less hours any one worker has to work to get necessary output for people to live a decent life. And so we certainly don't want to be slaves to work. And I think the fiat currency system, it can potentially, if you understand it, is what gets you there way quicker than having an artificial constraint of a gold standard or, so-called hard money or whatever. You want soft money. We want money to be unimportant. You want real production to be the important thing, and you want to get as many people working as possible to produce, to lower the number of hours that any person has to work. So we reduce the number of work hours to as small as possible. Is I think the target of the sort of MMT crowd that Douglas and I are kind of associated with, I think.
Yeah,
we are just totally against bullshit jobs and that. We're definitely on the Steve Keen, David Graeber, Steve Grumbine, Warren Mosler sort of Pavlina side of things. Well, I think all the MMTs are basically in agreement on all those aspects.
I'd still rather have a bullshit job than no job, though.
I think you got to redefine what you mean by bullshit. Yeah. David Graeber's lexicon. So Douglas is forcing me to talk here about things that he already knows. I know, and I know he knows that I know. But yeah, just for anyone who's not familiar with David Graeber's work, I guess it's worth saying is that the bullshit job is the one that is not necessary. and so what Douglas means is, he wants a goof off job, but that's the one that's necessary. That's not bullshit. That's totally necessary to play chess and e-games because it increases your quality of life and your happiness. That's not bullshit. That's could be called a shit job if you don't like doing it, but then why are you doing it? So the shit jobs are the necessary jobs that are just unpleasant. So we should try.
Yes, that's a very good point. Yeah, it's a very good point. Yeah, those are the ones we need. We need AI to take over. Then
there's the goof off jobs, which are the ones that are totally unnecessary, but you love doing them. So they're not bullshit. They're just goofy jobs.
Like MMT live streaming.
You're
effectively an e-gaming live streamer.
I'm just strictly e-gaming. Weird.
Speaking of e-gaming live stream, I just got to throw it out there. Would anyone watch? I play poker on the weekends. I like to play a little poker. It's legal here in Michigan. Would anyone, if I did a stream, it wouldn't be a VOD, so you just have to show up. Would anyone show up, talk MMT with me while I played some poker? Just curious. Real money, tournaments or something. Let me know if you'd come chat.
But Roanora, have you know that there are plenty of plumbers who like their work. They just like doing it. But
no, the only ones that enjoy doing it are the ones that like do it in their own house. Do plumbing in their own house, right? Yeah.
I could get into plumbing. It'd be quite interesting.
Pipes.
Piping. But yeah, I mean, it's a shit job. So the point about the shit jobs is they're necessary. So someone has to do them, the robots or the people. At the moment, it's still more efficient to have people doing them. I can imagine the extraordinary amount of effort that would be required to just replace all plumbers with the robot today. It would be it's just impossible, right? But yeah, that's what Graeber talks about. Is those are not bullshit jobs. Those are shit jobs, but someone has to do them. And so the point would be to reduce how many hours a plumber needs to work by having as many plumbers as you can have who like doing plumbing, I guess. But yeah, the other thing about MNT and the job guarantee is that there's an effort to redefine the meaning of work.
Yeah.
So that work does not suck.
Yep.
And that'll be almost by definition. So if you're a plumber, you kind of like plumbing, you don't have enough robots to do it, to push buttons on, but you still kind of like it. The point is that you're not having to do it like 8 hours a day. It's like 2 or 3 hours a day with a bit of robotic assistance might hopefully in the future satisfy everyone else's plumbing needs. Plus the AI could be designing better pipes that have low maintenance.
You'll never, by definition, if you're doing work, you're not going to enjoy it. So you'll never get the definition of work. You'll never get the. You'll never. No.
I pushed back with that one.
No. You'll never. No. Okay. I mean, you're never going to get. Listen, it's like trying to get the. It's like trying to get the government to convince a bunch of kids that doing drugs isn't cool, right? Like, I mean, the minute the government's like, "Hey, drugs are bad for you," kids are like, "Okay, I want to try these things out." I don't think there's gonna right. No, yeah.
I think I see what you mean. Yeah. But no, there's some philosophies where work is.
I understand what you're saying. I understand what you're saying. Yeah. I understand what you're saying.
It's a virtue. When you rethink of work as a virtue, it becomes an enjoyable thing.
I agree. And
you're serving the rest of humanity. You're helping people out.
The
thing is to have as many people do that as possible, so that we don't have to like labor and slave away at it. It should be a joyful thing to do.
I feel you, man. No, I know. I mean, I have a job just like that. My 9 to 5 the only time I feel like this is the worst thing in the world is when I have to talk to executives. That's when I realize this is a BS job.
That's like a bullshit aspect to what's just normal.
It's the worst. Oh my god, it's the worst thing. I had to give
every job has little bullshit aspects to it.
I had to give a 3-4 minute presentation in front of 1,700 people in the department about what my section was doing. I'm like, this is the worst thing. Not that I mean, it didn't bother me to have to give this presentation, but it was just the realization that like literally what they want is a bunch of a bunch of the buzzwords and that sort of thing for 4 minutes. And it's like this helps nobody. This helps nobody. Couple quick things. One, couple names I've never seen before, and a couple people showing up. TR, I don't think I shouted you out. Thanks for showing up, man. Nora, welcome back. Haven't seen you on. Thanks for the shout out and just the recognition that we're growing things. Daniel, I think I don't know if we've shouted out yet. And then this name Shumbi11. Welcome, man. Thanks for the thanks for dropping in the chat and saying hi.
Thanks
also,
dropping in.
Ken, I think I don't know if we've said hi yet, but yeah, thanks for dropping in. So quite a few of you dropping in saying hi. One thing that I wanted to go way back to was a question that I promised I would answer it, and that is, what is Granger cause? This is near dear to my heart. Quite a few of these things that Bijou has helped me with. We were starting up doing a lot of the kind of machine learning, statistics, that sort of thing, on understanding the data. Retro welcome, man. Thanks for saying hi as well. Granger, okay, so in systems that are linear, obviously you can just do linear regression, right? If you want to if you want to just see some analysis, you can do that. But so many systems are non-linear, right? But you can understand that if you if you can understand how the system works, and you build like a Minsky model, you understand that there should be some sort of causal effect going on from one variable to the next. How you can determine that, and particularly when you're actually looking at the data that you have that actually gets tracked, one of the things you can do is use something like mutual information as a first step. I know that's not up here, but mutual information would be effectively Nick Gomez. Welcome, man. Welcome. I don't know if you caught the start of this, but Nick, we talked a lot about you at the get-go, right out of the gate here. Great interview with two-part interview with the guys at Applied MMT. Absolutely awesome. So it was really neat to hear everything you had to say, and hear someone else kind of say a lot of the same things that I've been thinking for a long time, and someone who's kind of an active trader saying those same things. So that was really cool. Yeah. There are a few parts where I'm like, you're giving away the secrets, man. You're giving away the secrets, man.
Yeah, I mentioned, Douglas, listening to you on Applied MMT was like a nice little comfort food for me, intellectual comfort food.
Yeah. It was really good. It was really good, man.
Thanks. Very enjoyable to listen to.
Thanks for dropping in and saying hi too. So Granger Cost. So what we do is we have to see does one variable. The first step is, does one variable tell us something about the other, give us information, right? Right. And that's one of the first things we try and shake out, because what we ultimately do, and again, if you're not an active trader, it doesn't mean much to you per se, but what I'm trying to do is say, okay, there are thousands of these different data sets that are out there, and I know how the macroeconomy is likely operating given the kind of the MMT framework and the stuff kind of the endogenous cycle, the stuff that we kind of learned from Minsky. So what data in the entire data set is actually giving me what I need to then determine what the next outcome is going to be, right? So we run an entire data set along with kind of just a noise data to get the highest mutual information. So in other words, data sets that are telling us the most about other what we think would be a cause and effect data set. But then once we get that, it doesn't necessarily mean that it's truly causal, right? That one is necessarily causing the other. Now, from a philosophical standpoint, that gets a little difficult to actually determine. But what you can do is say, okay, I've got one variable over here. Can I determine if at a certain time lag, if there is at least forecastability to another variable over here, right? And that is what Granger cause is. It's not saying that necessarily, on a philosophical level, one thing is causing another, but you can say that it's at least forecast. It provides forecastability, and that is what Granger causes. So what I'm saying when I overlay inflation with a 10-year yield, I'm just simply saying that using Granger cause, there's forecastability from the change in the 10-year yield to the change in CPI, and I think that fits with the overall kind of assessment that we would have. Not to say that CPI, that inflation is purely a phenomenon of interest going higher, but that it is inflation is in part forecastable because or by the change in rates first. So that's what Granger causes.
Yeah, what it is.
What I'm trying to do is. Yeah. What I'm trying to do is not overload and put on Granger cause what's not there, but also say it is telling us something. And I think it's telling us something that needs to be accounted for, no matter kind of what perspective you have.
Yeah. That's why it's always Granger cause, the two words together.
Yes.
It's like saying I have a plastic apple.
Yes.
It's just an apple.
As opposed to an apple.
Yeah. It's nothing to do with causation. It's a type of mutual information measure. Mutual information is a different metric, but it's nothing to do with cause really. But it is a necessary. The logic nerds would say it's a necessary condition for there to be a causation, but not sufficient. So it's like my apple, to be a real apple, it has to look like an apple, like a plastic apple. But because it's plastic, okay, it's not really an apple. Hope that helps any of the non-math folks to understand it. It's why you never say it's causation. It's just Granger cause. So plastic apple.
How did Kanye West say
I have no idea who he is.
You know who Kanye West is?
Vaguely. Is he some sort of rap music producer?
He's a rapper. Yeah, both.
Very famous. Very buddy with.
Was famous, became very infamous because.
Yeah. Right.
He went down a word that I'm not going to say on the live stream path.
Oh, right. We'll get something to do with the J question or something. Yeah.
Yeah.
Man, that was. Yeah, I did hear about that part of him. Yeah. He's like the opposite of Cornel West.
Are you talking about? When the MTV Movie Awards, 2009?
I don't know, man.
I think that's what he was talking about. I'll look it up.
Oh, okay.
I'll look it up.
I'm sure he's up to all sorts of weird things, being so rich and idle. But I heard he's a decent music producer.
Oh, his music was great. Was it? Yeah. Okay. Through the Wire, all-time great song, one of my favorite.
I have to check it out then.
Yeah, no, it's really good. It's
my daughters are too, like, Miley Cyrus and Taylor Swift, and then One Direction, and then eventually they understood that Radiohead was like beyond music, true artistry. And then one daughter does classical piano as well, and the other one is now the latest thing is I don't know, Lord. They really like the Kiwi artist, Lord.
Yeah, Royals. I like the when that came out years ago.
Recent stuff is really good. But yeah, they were never really into rap, and so I was never really exposed.
Listen to it. Anyway, it's good. Jack, welcome, man.
Well,
yeah, he does.
You're going to make a point.
I don't know what my point is, but I'm too old to listen to Kanye now. I don't know. I'm stuck, man. The concrete is settled on my music tastes.
Right. So I used to think that. I used to think like Jimi Hendrix, Pink Floyd, no other music.
Yeah.
Or Ravi Shankar, or a bit of Indian Eastern music, and a few other. Zakir Hussain was pretty cool. Yeah, but then Radiohead came along, so yeah, and then having daughters came along, so. Yeah, I didn't mind the old Miley Cyrus in the background, or even what was that one before that? The Britney Spears. my eldest daughter used to get on a rebounder and do these crazy acrobatic routines to Britney Spears. So cute. She just loved it.
Ty, I'm not from 8 Mile. I've been very close to the road. Never actually had to get off that specific exit. My son comes to me the other day. He's like, "Dad, did you know who's really good? Eminem." Yeah, come on, kid. He was from my neck of the woods.
Jesus letting me know about Kanye. Thanks. Yeah, I do have this idea that Kanye is infamous now more than.
Oh, it's sad what happened, but what a dumbass. I mean, he deserves everything that kind of happened to him. He brought it upon himself.
Fame doesn't fit nicely on everyone.
For those of you who are new, hour 3 we go off the rails. It doesn't we cease. We don't have to keep talking. I mean, we don't have to go off the rails, but hour 3 we allow the show to get into whatever discussion we want. I didn't think music would be the choice tonight, but there it is. Everyone, let me know. Let me know your favorite. How about this? Give me 2 songs. Give me 2 songs. You've got. I want this in the chat. Song number 1. You've got some sort of like mental project that you have to finish, right? If you're a coder, you're a writer, whatever, right? And you need that song playing in the background. You're going to do your best creative work while you're sitting down at the desk. Give me that song. I also want what song you're turning on as you're trying to beat, your 5K time, whatever it is, right? Your Rocky song. Give me that song. Let me know what's going to get you that last 3 minutes over the finish line. I'd love to know.
Wow.
Give me yours, Bijou.
Good effort, Douglas. But we don't have Twitch streamers here. We've got intellects and
no, this is not. You don't think
nerds. I don't think we're going
against the wind, Bob Seger. God, I wish I could play some of these without getting demonetized.
Yeah.
I do.
The other thing,
I do like me some Bob Seger.
The other thing that I'm interested in, Bob Seger's based. He's great.
Did you say he's based?
Yeah.
Your kids
I
would be
did.
so proud of you right now.
I don't know what it means, but it's like he's a good working class
That's
champion
great.
of the poor and oppressed. Yes, it's the Bob Seger that my dad was fond of. I think that's the same one, right? That the folk singer guy, right? Who actually did the real?
Yeah.
Who actually resurrected the real, the proper lyrics to Woody Guthrie's "This Land Is Your Land," which are incredible. They're pretty awesome. Actually, you should check them out. Do you know the lost verses to "This Land Is Your Land"?
Are you talking to me?
If you haven't,
No.
yeah,
No.
yeah. Oh, okay, yeah. Yeah.
So far. Oh, go ahead. Go ahead.
I know it's censored. The other thing is also cartoons and things that are current on TV. Like I only hear about movies and streaming stuff from secondhand these days. So I did get Game of Thrones, but like a lot of my my good kids entertainment stuff stopped at the Powerpuff Girls. And then, what was it? SpongeBob was awesome, and Samurai Jack. And then it's like I don't know what else. I don't know if anything new has been created after that, or so. I always like a good sort of cartoon that's for kids, that kids can watch it, but the adults also get extra laughs. which is that SpongeBob was awesome in that respect. Are you a SpongeBob fan?
Never was. No.
Oh,
Yeah.
So funny. Yeah, great for kids, but also parents can get the good inside the adult jokes in it. It's quite cool. Bob's Burger, right? Yeah. I saw a few of those actually. Thanks, Josh. Yeah, they still making those shows. I was so sad when Samurai Jack did have a sort of a conclusion. No, that was pretty awesome show. All those robots and everything. It was hilarious. Well produced. I really like the art and direction of those. Actually, the guy who made Samurai Jack and the Powerpuff Girls, Gendy Tartakovsky, I think. I want to say that's what it is. He did have a thing recently called Primal, which is the cartoon. No spoken words. It's all just sound effects and grunts and things. And man, that was awesome. I love that. It's about a journey of a caveman and a dinosaur. It's quite actually heart-wrenching in some ways, but it's pretty cool. Anyway, that's just to I don't know why I'm revealing all these interpersonal tastes.
Because
what am I doing here?
It's third hour.
Oh,
it's third hour,
man. Macroeconomic.
It's third hour. It's third hour.
I'm saying job guarantee. Let's do non-bullshit work, but let's have a lot of creative people making more of these awesome entertainment vehicles like Powerpuff Girls and Samurai Jack. So it all makes life more enjoyable the more of that sort of entertainment we got. Anyway, what else?
I don't know, man. I don't know.
I had to give up video games, Josh, with the Commodore 64 when I sold that and then got into university. My e-gaming days is pretty much over. Actually, to be honest, I got intimidated a little bit by the more modern games. It's like, there's so much going on. And then I think, was it Doom, or there was a sort of 3D sort of Doom where you can go upside down and around. You're sort of controlling a spacecraft rather than a person. That just this one day made me so seasick, so nauseous. That was kind of it. I haven't really played any video games after that. And my brother really keeps telling me what Douglas tells me all the time. It's like, yeah, but the games are amazing because you're immersive. I'm kind of stuck now, waiting for a next good movie to come out. And I don't know. I don't know what'll get me back into games, but it'll have to be an awful lot of free time, which I don't really see. Ever. MNT, right?
Yeah.
MNT
If I keep asking you to, yeah.
MNT ruins me.
Oh, Apple Vision Pro. Yeah. Josh. Yeah, keep going.
Yeah, no. If I could find a way to merge some good entertainment with MMT activism, then I'd be set. I'd be happy. But
you should
my entertainment.
Yeah. Play Grand Theft Auto 6 when that comes out. Yeah.
Can I do that? Yeah, yeah. But no, I'm not. I'm probably not going to unless it has an MMT education aspect to it.
Oh my God, that was Ken. That was really good, man. Applying Granger to a discrete event would be like the lone Granger. That was really
nice one.
Apple Vision Pro, $3,500, man. Listen, I love VR. I mean, I don't use it enough, but it's sitting right back there, man. Listen, dude, $3,500 though, man. I mean, that is
be an early adopter on that
justifying a grand for that set back there was even that felt a little hard to swallow, but. Yeah. Jeez,
so we will need early adopters to tell us whether it creates nausea and vomiting and all that sort of thing with prolonged use, and whether it creates antisocial tendencies.
What's kind of I just think that price point. And at the end of the day, man, this is my thing with VR. You just got to get some good games. If you guys haven't played Half-Life Alyx, you can get your hands on a VR and you got a gaming PC. Play Half-Life Alyx. It's so much fun. I mean, it is so much fun. But that's it. I mean, that's the only game that I've ever been like, oh my God, this is like I could spend the rest of my life in this thing.
Half-Life, what is that? Is that a Half-Life series?
Yeah, it's the Half-Life series. Yeah.
Interesting.
Yeah, you're right. I might just have to sell the kidney. No, man, this is a problem. Is like I would buy it, but then she's like, something. She goes on about the kids' college, something like that. I'm like that. What?
What?
Yeah, something about braces and
college.
Yeah, I'm like, what
the? You're supposed to go to college to get educated these days.
Listen.
Sounds a bit passe.
Yeah, this is. I don't know. I don't even know why I have those conversations with the wife in the first place. Yeah.
Careful now. How thick are those walls there?
She's on the other side of the house right now. She's on the other side of the house. Quite a few square feet between me. Although she does
CCTV monitors on your wife. Have you?
Yeah, she does tell me that I think she's laying down with my daughter right now to get her to sleep, and I do think she tells me that sometimes on live stream nights they'll watch me stream. So. I guess I'm going to find out how expensive a divorce lawyer costs. If it's
CCTV keep track of you.
Yeah. God, we're having a ton of fun. I almost hate to go back to the topics at hand, but I do got a question about this Cantillon effect. I see this from
Richard Cantillon
effect. I'm going to go to this. The Cantillon effect, and I've looked this up before, refers to the idea that changes in the money supply in an economy cause redistribution of purchasing power among people, distributes the relative prices of goods and services, and leads to a misallocation of scarce resources.
Oh, it sounds very neoclassical.
I would agree with that in a fixed exchange rate regime. I don't think that I would disagree with that. Oh, nice, Derek. I will look that up. I will look that up.
It sounds very neoclassical.
It does. Yeah, it does.
What the hell changes in the money supply?
Yeah, that always bothers me. What is the money supply? God damn, tell me what the money supply is.
Yeah, you can you can keep the money supply fixed, so that's fixing supply, and then you let the price float. But then you can't speak out both sides of your mouth. If you don't want inflation or deflation, by the way, deflation is a hell of a lot more regressive. But if you want stable prices, you go let the supply float. So I don't know. He's talking about like what a fixed population size, fix this, fix that. Nothing, it's a stability, equilibrium type thinking. So it's just got it all wrong. That Cantillon effect. Okay, but here we go. If you create a little agent-based model or some sort of little system where all those
yeah,
assumptions
yeah.
apply, then absolutely the Cantillon effect is a thing, right? It just becomes a logical tautology if you set up a system that way. But that ain't the real world. So, oh, Ty, you break my heart. Neoclassical sounds good, right? Neo, that's new, and it's classical. It's a bit of the old. It's a good brand name. So yeah. So MMT is actually just neoclassical economics, just reinvented. It's new, and it's also a bit of classical. There you go. It's the story. No, I mean, no, to get back to that, yeah. So what was your question about the Cantillon effect?
I had just heard of it. I wanted to figure out what they were actually. Yeah. I think I looked it up a week or two ago. I mean,
it's in the whole basket of Say's law, Ricardian equivalence.
Okay.
All those things are fine if the logic works out, right? If you have a neoclassical system, if your system is in accordance with the neoclassical assumptions, whatever they are, you don't have to go through them all, rational agents or whatever, barter. So you're talking about a real economy and money is just a veil over barter, all that sort of stuff. Then all those classical, neoclassical stories just become tautologies in a way. That's the sides of it. It's just not. It's not our current system. It's not the real world. So I don't know. But yeah, go try telling a mainstream economist that, and I'll sort of you'll spark another debate. Some people will stick to this Ricardian equivalence and Cantillon effects. They'll stick to it like glue, and it's hard to budge them. Say's law and all those things. It's when you get those tweets that are just quite hilarious, and NMTers will respond to them, and it just becomes kind of like a bouncing to and fro. What are you pulling up here?
I'm just looking at because I don't know how to actually read. I need to look at the pictures to figure out what the Cantillon effect actually is. I'm trying just to see what these, what they're trying to demonstrate here. So I think if we were in a fixed exchange rate system, I would say, yeah, that makes sense. We're not in a fixed exchange rate system. The other thing too, with the misallocation of scarce resources, I don't know how ahead of time what the right allocation of scarce resources is. I think the argument would be that the private sector should figure that out, but I don't know.
Well, yeah, it also goes away when you have a monopoly. So only MMT recognizes there's a currency monopolist. So when you have the currency monopolist telling you what their currency is worth and creating demand for it with imposing tax liabilities, then a lot of the neoclassical stuff just goes away. It's just inapplicable. Inapplicable, man. Fellas. You can have a private market and private banks and purely endogenous money system and pure like money is the veil over barter. And borrowers and loaners are sort of just swapping. Okay, but what country on earth is that? What are you describing?
Yeah.
Doesn't exist, man.
I think that's really important too, just to point out. And Ty, I think you're still here. Your video is really good explaining the business cycle, right? So I mean, just in my mind, when I piece this together, right, there's the what I just call the endogenous cycle, right, which is kind of we would broadly describe as the private, the private free market, right? I mean, I'm going to say that, right? And then there's the government layer, and I think a lot of the analysis that I hear from the Austrian side just understands that there's this business cycle thing that exists out there, but then understands it all under the guise that the government sector, I don't call it a cycle, but the way the government operates with money is under a fixed exchange rate. And I I would agree. If that's the world that we actually lived in, then that analysis, the framework for analysis would be the way to go. But when we don't live in that world, and I see no compelling reason to want to live in that world. That's always, I mean, at least to me, the things that are most important to me, and this is undoubtedly just where at some point we hit the floor of philosophy and what is best for society and that sort of thing. But to me, a government that is democratic government that is elected, that doesn't have to coerce people to do the public good, those are important things. And I'm not saying Austrians necessarily don't want that, but it seems to me that is the only that is the logical consequence of that outcome. So,
when you say misallocation of resources, what on earth do you mean? You mean not what would have been allocated according to a completely free market, and that is only going to be just and morally acceptable if everyone has the same purchasing power, everyone has the same information, so on, right? So that's what the neoclassical assumptions are, right? That it makes sense to have a free market because they are using those assumptions, like a single economic agent who's perfectly rational, perfectly utility maximizing, knows ahead of time exactly what they need, and then all of society just acts like that. So there's no inequalities that can occur and all that. That sort of idealized fictional system sounds fine. It's not the real world. And so when you say misallocation of resources relative to that sort of idealized fair market system, you're forcing me to compare, a real apple with possibly worms in it and whatever, to plastic fake apple that looks perfectly good and healthy, but it just doesn't exist as a real thing. So misallocation of resources is one of those slimy, neoclassical type economic terms that's just, it's a slimy, weaselly term. When you have a monopoly, when you have a monopolist, you don't have that sort of thing. You have a monopolist. They are dictating price to you. They're the price setter. So if you have a currency monopolist, and I don't see how you can have a really decent, cohesive, large population society without a currency monopolist, because otherwise it's the Wild West. Then that monopolist bears a heavy responsibility to the rest of society, who are granting the monopoly through either, whatever it is, democracy or whatever system you've got. And most places they pretend they've got a democracy. So you better increase your democracy to have some sort of say over the currency monopolist, your government, if you want it to be a decent society, to exercise that monopoly power. But then misallocation resources becomes policy. So you can either misallocate them or not. So let's choose to allocate resources wisely. But the flaw in that neoclassical story there is that the free market will necessarily allocate resources correctly. Okay, so yes, if it's completely fictional, idealized situation that you assume exists, but no, in the real world, the free market in a real world is not going to do that, because monopolies will form, rich get richer effects form, and all the rest of it that history shows happens. So just the whole insanity of economic geeks who just have these models in their heads and they just think the real world should behave according to their model.
Oh Jesus!
I just find it's like it's just a waste of my mental space to have to sort of deal with these people. But I feel like that's underneath every sort of tweet from econ grad and real econ guy, and even Henrique.
I haven't seen him in a while.
He's kind of a nice guy. Seems like a nice guy. He's like engaging, but still, I think that the model behind their thinking is like, well, the world should be like we want it to be. It's like, yeah, well.
God. Yeah. His thing, man, when he was like, what was the phrase that he used? This is not inexplicable. Yeah, yeah. I'm like, what?
Right,
What a
right,
phrase! Not a single one of you guys were seeing unemployment plummeting to zero,
right.
and the boom that we're getting. Well, this is definitely within the realm of our models, and it's not inexplicable. And the lag effects make sense here, somewhere between 6 and 280 months. And,
Yeah, yeah. But see,
nonsense.
if you do want a government, you've created your monopoly, and so you've already misallocated resources just by having any government, right? Even a bunch of libertarians who come together, have an elected council to organize the community. You've already created government. You already created a sort of monopoly, and so are you saying, by definition, I'm talking to Charles here again, having a little aside. Are you then saying that it's already misallocated from the get-go, right? So what are you going to do? What you're going to have to do is to put up with the fact that you already, by definition, misallocated resources by tolerating any sort of government. And then the thing to do is to have the freedom of policy space to then allocate resources in a fair way, but then also define what you mean by misallocation. Misallocation relative to what? Relative to a completely unconstrained, totally libertarian freedom, unconstrained
and I
market.
think that's where it comes in.
That's going to be a dystopian, man. I tell you.
I think that's where I think that's kind of where the worldview thing comes into play, right? Because that's I think they think that's like the thing that is supposed to happen, right? Like
right.
The minute the government comes in to distort what any individual agent would want. Yeah.
And supposedly all us agents out in the private sector, away from government, are all wonderful people who know how to treat each other really well and don't need any police because we're all well behaved and we're all generous and kind towards each other.
What is small government, though, Charles? I think small government is as big as government as you can possibly get. I think that's the thing, right? When you say small government, what I hear is power in the hands of as few as possible. That's what I hear when I hear small government.
And you were a right wing, Ron Paul guy, so it's always interesting to talk to you and others like Grumbine, who came from the right wing world and believes ideologically in small government.
Ty, speaking of which, go ahead.
Yeah. No, it's sort of a nice sounding thing, right? I don't want the government on my back either.
Yeah.
So in a sense, in a poetic sense, I can agree with all these Austrian scholars and libertarians and that.
Yeah.
And who doesn't want freedom? But justice triumphs freedom. If you don't have justice, you don't have freedom. And I wish more Americans would admit that in your constitution or whatever it is, you've got what is it? Justice, freedom, and what is the other one? Liberty or something? No, what is it?
What are you asking?
What's your constitution? Freedom, justice, and liberty for all, or something like that, right?
Life, liberty, and the pursuit of happiness.
Life, liberty.
Okay. Is that what you're thinking of?
Something. Yeah, I'm thinking more of the official stuff. But anyway, a lot of Americans emphasize freedom, but I keep telling my friends, yes, but how do you really maximize freedom, or sort of think of it as an optimum? You can't think of it individually, because you cannot maximize one person's freedom if it infringes on someone else's. So there are these ideas of negative freedoms and positive freedoms, and I think you can't. I don't think you should. I don't think it's wise to just fixate on one or the other. But to have like maximum freedom for all people, not just for a privileged few, you have to have justice. Justice, I think, goes first. And then, of course, these libertarian leftists will jump on me and say, well, who's justice? Who decides what the justice is? then I'm back to, well, it's a discussion, it's a debate. It's what being in a society is. I can't tell you what justice looks like. It's something we have to figure out for ourselves.
But at the very least, it is a policy decision that can be debated.
Yeah, I know.
Yeah.
Okay, you can have no government in a community of a few hundred people. I think that's doable.
Yeah.
But yeah, you're just really saying you 100 people in your commune are the government. It's like, anyway, it's good. It's good fun to chat. Good fun when Charles jumps into our chat. I think he really pokes me quite well.
It's good. It's been good. Yeah, Charles, man, thanks for. I mean, I know it's like 1 or 2 against 20 tonight, but I really appreciate it. I really appreciate it, man.
Charles again going on with the definitions. This is this. Wealth is this. Justice is this. But I agree with a lot of the moral or ethical sentiments of all these people.
Yeah.
And if you give me a neoclassical or let's say because Mr. One Shot's left the chat now, but he was tisking me for confounding neoclassicals with neoliberals, but I'd agree with that. They're not the same. But even if you give me a neoliberal, I can always find points of agreement with them. Because deep down, people who just have the understanding all backwards, like I earlier tonight mentioned in various languages. Usually they have some sort of subjective, ethical, moral backbone to their thinking. And when I say people are totally immoral, usually I mean amoral. They're just sort of not really thinking hard about things. But if you press them, if they're just not a total like psychopath, what am I saying? Then I think there's always points of goodness that you can find in people, and try to bring them along. Just try to point out where their understanding of the system dynamics and the policy space that's available to us really is. If you understand that, then we can actually make a lot of progress. Which goes back to the e-gaming and the goofy jobs, the jobs that we all sort of want to do, that would be pleasant things to do. Redefine the whole meaning of work so that it's not slavery.
Yeah.
Is just such a journey for me now. I truly find it hard to see getting MMT, awareness enough in society beyond the small academic nerd type communities that we've got, that will actually, see the benefits of the comprehension of MMT getting stronger. So when anyone like Charles from an Austrian school background comes into the chat, at least he's on board with a lot of MMT analysis, and that's all really good stuff. But you've got to get more people educated about it, so at least they're aware. And I see this as a lifelong process. So I'm always going to come back on this live stream as long as I'm not flat on my back sick with the flu or something. By the way, how's your flu got over?
I still have this cough 6 weeks later. I'm still coughing. Still coughing.
Yeah. Shouldn't have gone to Disney. Should have gone to Warner Brothers. Warner Brothers is greater than Disney.
You mean Universal?
I have no idea about the theme parks. I'm only talking about the cartoons.
Yeah. No, man. They've speaking of selling stocks to buy things, someone made that point. Sorry if I'm calling out the wrong person here, but like that it's kind of meaningless. Derek, maybe it was meaningless to define, money is anything when you can just sell stocks to buy stuff. And I was thinking back, I'm like, yeah, I've definitely done that at Disney. And we're like, well, we want to go another day and it's going to cost us $2,000. Yeah, okay, whatever. I can let a few shares go to pay for it. I have absolutely been there on my phone before, being like, yeah, we'll charge this to the old TD Ameritrade account.
Because I've seen you point out that you're also an MMT, Charles, and I'm really enthusiastic and happy about that, because you must be also. Do you have like connections with Austrian scholars and von Mises type people? Because it'd blow my mind to see how you get along with them. I reckon you'd find them more antagonistic than us other sort of hardcore MMTs.
When you say you're an MMTer, my guess is what you mean is the like framework for analysis stuff.
Framework for analysis.
Like MMT's right.
Yeah, so you could be an MMT but also want a gold standard for some odd reason.
Yeah.
But then your analysis would be about you're deliberately constraining the fiscal space available to government. And that's your plan. You know you're doing it because you're an MMT, you want a gold standard. And I think where I agree with Charles on is, and it's actually the same with most people in our chat from what I can tell, probably Ty especially and the others, is that we want to reduce the gross conspicuous consumption and just wastage of resources that's going on. It's just a crazy consumer society. And I don't think that the thing I think I've been disagreeing with Charles in tonight is just that fiat currency isn't responsible for that. It's the policies that drive it. And yes, you can artificially cause austerity and constrain governments by imposing a gold standard or a fixed exchange rate or what have you, but the costs of that are just horrific. I'm not prepared to sort of tolerate those costs, even as a kind of even as an experiment.
Yeah.
I just don't think we should go in that direction. I think we should go in the direction of better education about what a fiat currency can do. It opens the policy space for good and for bad, but then the moral economy kicks in. I'll go back to Samuel Bowles, Bowles. Read Samuel Bowles, great behavioral sort of economist who writes about the moral economy and about actually what's really distorted is not allocation of resources so much. It's not so much the problem. What is a really bad distortion is when governments impose policies and laws that take away our moral agency, that like use the law to sort of bypass morality. And that's a terrible. What happens is you get these terrible effects where people then stop thinking morally, and you can have really perverse effects that happen. And so what I'm saying is that we want maximum policy space available, but we also want people who understand what's possible within that space, and we want the democratic freedoms to elect people who are sensible. And we don't have that today. So this is the whole project. It's a wider MMT project. Now, can I fully circle back now to the very early on?
Yeah.
Who was it in the chat mentioned policy? I think it was Charles again. And it just gets back to the whole thing about people who say MMT lacks policy. So what I'm going to do is here wag my finger severely at Brian Romanchuk, who the other day posted an article on his Substack pointing out that he was at this meeting with these Canadian policy people, and he but by the way, this is Brian Romanchuk in my imagination, straw man, okay, just to be clear. It may be the real Brian, it may not. I don't want to cast any shadows on him, but this is just what I picked up from his Substack blog, is that he pointed out that he had a hard time because they wanted an MMT analysis from him, and they wanted policy, and he was like, well, sort of job guarantee, maybe zero interest rate, but nothing else. And I was just like slapping my head. I was like, what? If anyone comes up to you and asks you as an MMT what policy you've got, you should just throw the whole kitchen sink at them. We've got this policy, we've got that policy, all sorts of policies. Like anything you like with available real resources could be an MMT policy. So it's a matter of analyzing what you can do sustainably with real resources without creating a massive amount of waste energy and just wastage. So zero interest rate policy and the job guarantee are core or narrow MMT policies that almost, I'd say, follow just logically, right? It's just a matter of logic. But beyond that, MMT, it's like, to use Anna Douglas's intro, like MMT has the only understanding of the full available policy space, right? MMT gives you the maximum policy space, and so don't ever give it. If somebody ever asks you about policy, you just take that opportunity. Don't squander it like Brian did. I was like shocked. I was like, how can you possibly say MMT doesn't have any policy or has very little input to policy discussions? It's all about policy. It's the maximum policy space available. So anyway,
mandatory toothbrushing laws. I like it, man.
What's that? I haven't been watching the chat.
Derek, you said policy mandatory toothbrushing.
Yeah, right. We could have that if we got the toothbrushes.
Yeah.
As long as we could resource the toothbrushes.
by 8 a.m. Get it done. Yeah. Let's see, man. I'm hitting the wall here, guys. We got we're almost 3 whole hours in. As we wrap up, let me just remind everybody, on Saturday I'm going to be on the Prof. Steve Keen live stream. Make sure you tune in to that. Hopefully Ty and I can get into something we disagree on. Probably won't be much, but Ty, hopefully you saw. Maybe one thing we can get into that we agree on is activists. I liked your take on that, but I'll be on that show on Saturday. You got me 2 whole hours coming up on Saturday. I don't know what else I had to go over. I thought I had one more thing that I wanted to mention. Yeah, again, Applied MMT podcast. Nick's 2 episodes, absolutely great. I'm there, man. Yeah, I've got the link, so I'm showing up whether you want me to or not. At that point, I will be there.
I'll see if I have a late night coding. I might drop in the chat. But anyway, yeah, I hope that goes well.
I think I had one other thing. I don't know. With that being said, I'm tired. But it's been a great. This has been a great stream. Everyone who showed up tonight to talk, man, it was an absolute blast. These are growing. I think we're having a ton of fun. Chat's really leading the way too in terms of where we want to talk about, which I think is what we all wanted. I think we all wanted as well.
I did have one thing that maybe I'll save till next week, was that this whole idea of all the gimmicks to get bypass the debt ceiling. I think I had a few things prepared. I'm a bit tired because I haven't had lunch, so different tiredness to you. But I was just thinking, the whole debt ceiling is the gimmick. The debt ceiling is the gimmick.
Yeah. Well, it's gone for
hilarious to watch people sort of get on the whole. What's the least bad constitutional option to get around the debt ceiling?
Yeah.
Biden to just sign it away because he's got the constitutional authority, or is that less constitutional than scratching a piece off the $1 trillion platinum coin and putting it in a micro safe deposit at the Fed? Or, what's the least gimmicky here? Well, the debt ceiling itself in the first place was the original gimmick. Yeah, that was like the gimmick to artificially constrain government and to prevent full employment. Anyway,
that's the point.
Maybe it's enough for another day.
Yeah, man. Tonight was a great show. I thought last week's was great. We're finally hitting our stride, and thank you everyone for being here as we do that. And it's a fun place to be on Wednesday nights. That being said, I think.
Charles keeps hitting me. I agree.
We're good. We're good. We gotta let Doug's gonna fall asleep at the desk, man. Charles, man, make sure you make it back. We'll pick up the discussion. We'll pick up the discussion tomorrow.
It really gets on my nerves that people equate MMT to UBI. It's just so bad. Anyway. All right. Good night, Douglas. Good night, everyone.
Give me your outro if you got one, though.
Outro. Okay. Well. I'll do a Spike Milligan MMT high class poetry.
Okay.
Only the best literature here on the MMT. Just so that Spike Milligan poem, say bazunka every day. This is the MMT version of it. Okay. Say bazonka MMT every day. Say MMT each dawning day. That's what my grandma used to say. It keeps in check the fiscal blues and helps the many, not just a few. So, say MMT each sunrise day. That's what my grandma used to say. Don't say it if your pockets are full or when the market's in a lull. Never say it amidst your greed. The word you see helps those in need. Only say it with equity's sway. That's what my grandma used to say. Young Tiny Tim heeded her guide. He said it once, he said it wide. He said it till his final hour, and even then, it didn't sour. So, say MMT each brightening day, just like my grandma used to say. Now, folks around will testify that every night when the moon is high, if you'll sit with a caring heart and shout MMT from your part, you'll hear the echo clear and gay, just like my grandma used to say. Embrace MMT with fervor great. That's what my grandma did advocate. It brings full employment, just and fair, and economic justice rare. So, say MMT, don't delay. That's what my grandma used to say. For more high-class MMT poetry, tune in next week. Same MMT time, same MMT channel.
That was great. See everyone. Thanks for spending 3 hours with us. It's been a good time. We'll see you all next week.